Was that? Yeah. Well, we're looking for, it's just basically completed its retest of the red yellow line, and it could be in the continuation phase now. So we're looking at potentially continuing away from it, but it's known to be like get a double retest and so on. I'm actually gonna make this the thumbnail. That's terrible. I mean, I'm gonna leave it like that anyways. It'll have to do. Hold on a sec. There we go. So there's that double retest. You can be a little unforgiving with it too, usually. Good spot to take off any hedges. And it's like now, I literally on that account, I'm just gonna focus on finding hedges for it, because that one NQ is dead to me unless it lives through the earnings. And that one NQ could be worth upwards of $10,000 just for holding it. And I mean, like, okay, that account is as good as gone to me. I don't even care about it right now. I'm focused on another account, focused on finding a hedge. But that one, it's locked in. It's either nothing or something. So you can have multiple accounts on NinjaTrader. You don't have to have one. You also can have multiple accounts on other different platforms as well. Like I have long-term accounts and NinjaTrader accounts as well. I have stock trading accounts too, but I don't really touch them. No, like when you trade with a prop firm, if you pass one of their challenges, you get an account with them, and you can pass 10 challenges if you want. I have 10 accounts with one uh prop firm. Because back in the day when you wanted to do futures trading, you would open an account with a broker, you would put money into it, and then you would trade on that broker, which a lot of people still do. But there's another option that's cheaper now, and it's basically you work with this firm, and they put you through a test where you either make 15,000, lose 15,000, or it could be more. Like it could be make 20K, don't lose 9,000 or something like that. And it all depends on whether or not you can pass that test. And when you do pass the test, they literally give you the full account, and they just take 10%. So it's nothing. And I'm like, all of the risk everybody puts down, like thousands and thousands of dollars. All you do when you work with one of these firms is give them $100, $200 maybe, and that's all you can lose. But they give you like upwards of, $25,000 account is the minimum. So they give you a pretty decent account to work with, and the risk is capped at $200, and they can have their 10%. They let you keep the first 12,000. So at the end of the day, yeah. Yeah, dude. Because at the end of the day, you don't have to open a future. Like, you know how like when you're interested in like simming and stuff like that, it's like, and you're looking at practicing. If you're gonna open an account with like $50,000, what is it to practice on a $200 account or $100? You know, the funny thing is they don't uh they don't just offer it like that. Sometimes they do a sale for like $8 or something like that. I'm like, how can we not pick that up? I mean, it's just like, even if you are trading on a very large account, just pick it up, and trade it when you're not supposed to be trading your normal account. Like, trade it in times where you don't want to touch your normal account, but you still want to practice or something like that, and you're not like completely just like you don't have nothing in the game. Because I think that that's actually a negative thing when because people, it's harder for an individual to practice properly if they don't have any kind of skin in the game. But even if you've put down $50, it's like it changes it. It makes you not want to be. Makes you not think fuck it too quickly, because those are the two most dangerous words in trading, other than quickly. So it's like very much the case. Hmm. No, you don't have to do that, because like at the end of the day, like if you get involved with one of these companies, they give you an account that works exactly the same as a live account would, right? So, worst case scenario, you get to see what you do with their 25K, and it's not a bad thing. And they just did a deal right now where they get okay, so they give you 10 tries when you buy one deal. They give you 10 accounts, and if you pass one of them, then you're in. And I'm like, dude, that's crazy. So what they did was is they gave you 10 accounts, and it was about I think it was like $60 or something like that, and get 10 tries on a $300,000 account. Then when you basically pass the $300,000 account, like I like those ones because they give you a lot of flexibility. Like, you're supposed to make 20K or upwards of 20K on it, but that what's up? Mhm. Yeah, yeah. That's what's up. Oh, somebody's open micing. Or I heard myself. But that's okay. Oh, I came through my mirror mic. Okay. Well, no, you're good. Oh, okay, okay. Right on. Yeah. Yeah. This sounds like a teenager or something? Oh, okay. Almost. Oh, yeah, yeah, makes sense, makes sense. Yeah, it takes up to you then. I managed to hedge it again, and I'm just taking more off here now. I've just been like hedging it each time, like this. Yeah, like that's only three contracts there. It was 30, or sorry, $55 by the time it got to here. So that's like nothing, and that's just that little tiny ass move right there. 50 freaking bucks. That's at 70 now. So I'm like, oh no, no, not at all. But yeah, we can totally hang out and talk about it for sure. Oh, nice. That's what's up. Somebody says they haven't got sound. I'm not sure why. It's like it's weird because it's one of those trends where it's been like screwing people over. Where every time it breaks, it doesn't break enough really for options or stock traders. And I've noticed that it's just getting worse and worse at breaking. And it makes me think that they're trying to start the run on a squeeze. And it's like, so long as I keep the NQ at the bottom, okay, and that's worth 10 MNQ. So long as I keep my hedges beneath 10 MNQ, I will always be making money on NQ. Even if I trade with 9 against it. So if I trade with 9 against it, I make money when it goes down. Except, you know what? If I lose on this, it's like I still have 1 from the bottom. Isn't that funny? But everybody else has sold their position and is trying to short now. And when they lose money, they just get railed. And I don't, because I'm hedging. So if I keep it to 5, then that means I'm literally keeping like 5 all the way up, even if I lose money. Literally. And the thing is when you employ this strategy, it's proactive management. So it wants you to keep trying. Even if you're wrong, does it matter? No, because you're making more money on the freaking long anyways. Just don't be wrong at the same spot twice. And if you want to be wrong at the same spot twice, then use half or less, and you're actually allowed to be. You can actually try so much more if you use 3 or less when you have an NQ. You could try twice. If you're using 2, you could try so much more. You try 5 times. Or you even lose money. You have to lose 5 times at the same level. Yet it's not really capturing a lot of movement against it. But I say, hey, even if you've used 3 and you capture 3 moves against it, and that amounts to something like $300 or something, I'm like, dude, that's an extra 300 on top of this. I mean, at the end of the day, every single time that one would be worried about it coming back on NQ, all you're doing is making money on that worry and offering yourself protection. Oh yeah, what is it? Hmm. That's what's up. Yeah, yeah, yeah. That's a good one. Nice. Yeah, they go.
This next few weeks since I've got a bit more time off, so that'll be great.
Just remember the bundle doesn't renew, right? So
Yeah,
it's
that's true.
timed.
It's a
It's timed,
one-time payment, right?
and you
It's a
have to.
one-time payment.
It is, and you have to do 10 days, right? I think unless they've changed it. Sometimes they lower it to 5 days, but I think even when you get the account and it's in there, it's good to make sure that there's one trade taken on every single account, even the day that you get it, right? So
Buy on every single account, if you don't mind me asking.
that's on. Pardon?
Is that just like one of the parts of the deal you have to do on every account, or?
Yeah, yeah, every single account. So if you get 5, you have to do it on all 5. Because the thing is like, okay, let's say you traded on one account, right? It was going really, really, really well, and then it got to 29 days, right? And then you failed it, but then you went to the next account and passed it. You don't have 10 days on the next account, so it's not going to allow you to to do it. Oh, that hedge is profitable here.
I thought it was just you have to pass one of those 5.
You do, but you have to have
Oh,
10
okay.
trading days on it. So like if you've failed the one that you've primarily been trading on and you don't have 10 days left to do the next one, you're fucked, right? So you have to make sure there's like every single day you have to trade at least one small tiny trade. Like you could go in and out once if you wanted to after
Right.
hours.
Okay.
But just make sure you've got that one on there
So,
cuz it
so it just needs to be one every day then, just one little trade a day.
Yeah, until you've got 10 days on each one of them, or until you've passed the one you want and you've got 10 days on it. Like the thing is if you pass an account on the first day, let's say, you still want to just do in and out, in and out, in and out on each one of the accounts, so you've got one, just in case. Anyways, like just to
Yeah.
be safe. And of course, you have to continue doing it on the account that you pass because it needs the 10 days.
It says you can qualify in one trading day. It says I think you can.
Oh yeah, I think you have to pay extra though.
Ah, right. Okay.
Oh
Okay.
wait. Unless there's this part of the deal, if they're like, if you can and it's free, then yeah, they've done it before. It's like it's almost like you have to read all of the deal. If they have any kind of particulars, they might have changed it. Because I know the last few things they've done were like you can pick your own deal, but just pay $10 for the deal. Like you can pay $10 to be able to finish it in a day. Pay $10 to have a reduced, uh, or a one-time fee or something like that. Or they were doing.
Oh, just put a picture in there.
Yeah, let me take a look.
General non-exclusive.
Oh, and it's also saying it's Halloween sale, so they're definitely gonna do more too. Not that this one's a bad one, but oh yeah, okay. So yeah, they say they have edge enhancers, which is good. So when you buy the account, it'll ask you if you wanted to have any of the edge enhancers. You could say qualify in one trading day, but then if you wanted that, then you'd pay $10 or a reduced one-time PA fee. If you wanted that, you'd pay $10. Additional 500 allowed for payout requests. That's another $10.
I'm not quite sure where it says you need to qualify. How long it takes, should I say?
Hmm. Yeah, I'm not sure where I originally read it either, actually.
It didn't say on here. I mean, I'm on my like account information here. It doesn't say anything about like qualifying in 10 days or whatever.
Cause I think it's standard. Maybe like I mean, if you just buy a normal account, that's what it is. Like no bundle or no deal or nothing. Like every account across the board has to have 10 days on it.
I always thought you just had to qualify by the well. Can you so you can qualify in 10 days, but what if you surpass that 10 days? Isn't that a problem or?
No. If it is 100%. So if like I've passed them like tons of times just on the first day, and they won't give me the account until I literally go in and out. Like just at the close, the next day I'll literally go buy sell, and it's out 50 cents loss, whatever. I don't care. It's even a dollar gain doesn't matter. It's like, and that's it for the day. I have to do that for another 9 days. Unless it otherwise
Right. Okay.
specifies. Because what they're saying right now is on that edge enhancer, um, qualify in one trading day is one of the options that you can buy, and it's like, so if you don't buy that, then you don't qualify in one trading day, basically.
Right. Okay.
Hmm.
So what if it takes you longer than 10 days to technically make the
Oh well, you
payment?
have 30.
Oh, you are full on 30. Okay, so you can qualify in 10, but if you want to go surpass that, you can.
Yes, exactly. Yeah,
Okay. Cool. Cool.
yeah. So it's not a bad thing. It's like it's just a little bit of a pain in the ass if you pass it early. That's the only thing it's
30
saying.
trading days, John, or is it just
Yeah.
the
No, it's not 30 trading days. It's 30 days.
days? Yeah, because
Hmm.
really, basically, it's only 20 trading days.
Yeah, exactly. Because of the weekends and stuff. Yeah.
So they
Yeah.
want you
Yeah.
to at least trade half of those days,
Hmm.
bare minimum. But
Doesn't sound
definitely get
too
the
bad.
bundle. Bundle's the way to go. I don't know, understand why guys get like individual ones. It's crazy.
Yeah, dude. For the 300K bundle that they just gave out, they give a 10 try one. So
The
Yeah.
thing is, though, with your first payout, you can pay for that account anyway, right?
exactly.
You get your first payout after 30 days then? Is it, once you pass the account, it's 30 days, right? You need to trade for 30 consecutive days, then you get your first payout, do you? Is that how it works again?
Yeah, but those are 30 trading days though.
Right,
So
okay. Okay, cool.
that's a couple months.
It's not too bad. I mean, it could be a lot worse.
Yeah.
I mean, as long as you're consistent, you're growing that account, and then after the 3 months, you can take as much as you want anyway, right?
Yep. Exactly.
So I think just patience with these accounts, then, right? Patience with the account, build it up, and then just take out
Yep.
as much as you want.
Yeah, and until you take it out, you don't get taxed either. So
Ah,
It's a
okay.
tax-free
Yeah.
asset until you, well, tax-deferred asset until you actually take it out. So it's kind of
Yeah,
a cool
yeah,
thing.
yeah. Maybe we're just holding on to it then for that 3 months, then, right? Not even taking out $1,000 or something. It's $1,000, right? $1,000 a month, I believe.
yep. Exactly.
Cool.
But using other companies' capital to learn and to
Yeah,
increase your
yeah,
net worth, shit, that's the way to go. Don't involve your own money more
yeah,
than say
100%.
$20.
Yeah, true. Yeah, it's the goal, isn't it? Make the money with Lulu, then get your own account. I think that's the plan.
I mean, Lilo will make enough money with way too many people jumping in way too early
Yeah.
and buying like 40 or 50 accounts and failing them all.
Yeah,
Exactly.
I was explaining that to my friends. It's like they don't realize like how many people fail these things. You know, because they don't know what they're doing.
A ton, a ton. They jump in too early. I waited a year and a half before I got into a Lilo account. A year and a half.
That's a long time, man.
Yeah, and I qualified for 4 accounts right away.
Oh, that's brilliant. That's awesome, man.
Yeah, but it just takes patience and time, man.
Well, I gotta head out now, guys. I'll catch you guys in a bit.
Yeah, man.
Sounds good. Take care.
See you.
See you, man. I'm under the impression that they're gonna try and move it on a squeeze. Like, I think they're kind of having trouble with that VWAP ultimately.
That's probably a few days ago.
Yeah,
Oh, okay.
just through the weekend basically. It's consolidated at all that volume that it had right before. Yeah, weekend. Basically, it's not safe to put any stops above this B point. It's like it tried to pull off the smallest of right shoulders on the very short term. Then is giving people trouble, of course, about it. I can see that it's dropped back to the spot where it basically had a little bit of volume in the volume profile. Kind of like it's created a little bit of a blue line through. On the short term, it's like it had a fifth wave just close to the B point. As I said, no stops are safe above that point. If you did take any hedges, not a bad spot to consider taking some off. Beauty of it is as well is when you can hedge back, it means that you're not gonna try and buy anywhere in here. And like in here is where it's typically tough. And that's a big area. But if you're in from here and you're trading down, taking profit in this area, means that you don't have to go for a crappier place than you're already, that you've already went for. And whoops, blue line. I didn't mean to take the blue. That's the blue. Also, it tapped a tiny little B point. The other indexes didn't try to hit their B points though. Funny about that. If they did, look like a lot more on the Nasdaq. Then again, it's Nasdaq that really has the eyes on it, because the earnings tomorrow, like, I mean, think about how everyone's gonna have to position themselves today. Any ordinary person would have to buy today or sell today if they didn't want to burn a day trade the next day if they didn't have a 25K account. That's the funny part. You could assume a lot of people will be interested in positioning themselves from today. American people, at least. It is the American index after all. So I mean, to consider them is good. The hedges, I reversed the hedge. So short, 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 then long. So put the. There's no better way to do it than this way. It's like if you could go back and do it again, this is exactly how I would do it. 100%. No better way to do it. This is exactly like if I understood exactly how the market could move exactly before it could make its moves. This is exactly how you could do it, which is crazy. Absolutely insane. I this is what I work for because I'm like, literally I find it extraordinary, which is keeps me going every single day. It's not even the money at the end of it because it doesn't change what I'm going to do at the end of the day. I'm going to do something that doesn't even cost any money, which is what I've come to realize. Like it's crazy. It's all about just keeping in line with the market, understanding exactly what it's supposed to do, and being in line with every single move that it makes. That is the way. People believe it's unbelievable to do what I just did. No, people don't even try. So that's the interesting part. People have them convinced that they can't do it, and they believe them because they're pretty convincing. But they convinced me for 2 years before I didn't even know that I could do what I did, and I literally bought into the weed market, and it blew up way more than I thought I was ever worth. So that was the first eyebrow raise. And then the more that I looked at day trading the blue chips, I could see that there were people in control on a daily basis. And every single day I get proven more and more and more that those people have a certain way of doing things and they maintain control and they're very good. And if you understand the game as they play it, the composite man uh, theory. But I can see clearly it's other human beings. There's no deity controlling the market. And if there is, then I'm honored. But I'm not, I don't even go there. I'm like, what? No. That'd be interesting. Would be interesting. Let's capture in the future. I look back and I'm trying to find out what I would have done in different spots. Yeah, I can see they're long. And everybody that's been a seller over the past few days has built up a very, very negative approach of the market, and I can see that. Why is it so particular that they just buy it back to the white dash line? Most people that look at it like this, they won't recognize something so particular like that. But it shows the mark of the institution, literally. Like so particularly. Like the white dash lines mean institutional buying lines. I don't use them for anything else. It all gets bought back up to the white dash line, but not the people. People don't buy it back up to the white dash line. The institutions do. The people don't move the market like this. I just I when I keep a control on the market like this, I make sure that you know, I look at it like I'm gonna discipline myself if it's not if I don't continue following the rules. It's very much a fear of the of that. So I make sure I follow the rules 100%. My stops in profit on the hedge again. If it breaks the red yellow line, or sorry, well, it's a yellow line essentially. Could be red yellow, but be the only yellow line. It's the biggest risk right now to any long trades.
It's just that there's no volume up here, so it's got to go sideways and build up and build up and then go up a little higher maybe.
Mm-hmm. Yeah. On that move as well, I took the US 500 back to the B point as well. But just back to the B point because I wasn't watching it.
I've got a question about support lines.
Yeah, what's up?
So you've got a fairly steep support line on your other graph there.
Oh,
And I'm just
here? Yep.
wondering if we start, I've got one drawn out that goes from sort of the top of that high and traces up to the right towards that new low there. I'm wondering if that I did it wrong. I don't know. It's just different.
Okay. So the new high here. Sorry, you started it at the same point? You didn't end it at the same point? Or
No, I'm straight up from where you started at the high point, just over from where you started. Yeah.
up here? Yeah,
Yeah.
see
So
that?
like right there.
See, that's not a bad line though. It's just a different one altogether. That's what I would say about that one. It can be found, I think, in other spots sometimes. Like when it does stuff like this, and I'm like, oh man, that's a lot of love for that trend line. You know, it goes here and then it comes back and tests it just to do it again. Like this right here, this motion of coming back to test it technically happened again here, which is like, holy crap, that line. And I'm like, did that twice. It is a huge line, and then for it to use that angle again in the future,
Yeah.
um, pretty good. I like it.
Yeah, so that's just what I was looking at. I was just wondering why they'd be different. Really, it's just an approach thing, I guess.
Well, yeah, there's a difference between the two lines because one of them's steeper than the other ones, and I think that
I mean, clearly yours is calling out the movement better than mine, but I was just sort of wondering.
well, it's a different line altogether though. This one, you know, the reason why I know that in order to get to that one, we have to break this one, so it becomes I can change my center of focus to be able to say, all right, what resistance could be responsible for breaking this line? Because if I can position myself from a smaller area, um, again, like for it to break, um, then you know with less space between the support line, we run into a resistance. It's all about can that resistance make it go sideways for the small time that there is left, um, and then break that trend. Because the thing about running into a resistance line, like let's say for instance, if we run into the red zone, it was born as a resistance line, and essentially. If we respond to it, the only way that we can actually show that it's a resistance is by spending time there or coming down off of it. And if if the price is so close to this yellow line that it can't really spend any time there and it can't really go down off of it without breaking it, it becomes a very interesting situation that it can leap, you know, a little bit to try and grasp some more time so it can choose to respond to it, but then it looks like it didn't even work. And it really puts a lot of stress on the major trend when we start to run into levels that are actually worthy of responding to, and it's like, well, is the trend going to break? Most likely, yep. And the thing is like, can the trend break like crap? Like here, when it broke originally, it broke like this and then broke again, and it's like that's cheeky right there because it broke a little bit and then it came to a new high like right after, and then again. And then it's like, what do people think about the trend break now? And then it broke here, and then literally again, we're like 7 times or something now, and it literally did it again over here. And I'm like, wow. And then finally, what do the people think by this point? Is it ever going to work? And then what's funny is if they started trading here and tried to go down and down and down and down and say they got stopped out and stopped out and stopped out, or they just held the position, it only came down to the very beginning of where people started from. So I mean, it really didn't offer them much. Like if somebody shorted here, it just came back down to where they got in. So it's kind of like a really, it's like it's taunting them really. And I can see that with a lot of stocks and options traders. When we were over here, I was like, it's not moving down enough for them. You know, like the stocks and options traders just weren't getting enough movement to be able to secure their profit properly. And it was doing it again and leading them on and on and on, slowly just burning their entire like position up. And then when it came down, it had the audacity not even to really give them much profit for all those people that had the patience to hold. And I mean, it still puts them in a really tough spot. That's why I was like, hey, we're going up on a squeeze here because these people are getting wrecked 100%. And I could see that. I was like, people are shorting right into the trend break, and yes, it's making it difficult for them to break the red yellow line, and it ultimately it wasn't harsh, fast movement, but it slowly grinded them away and really didn't offer them much relief when it did come off. So I'm curious about this. Makes me makes me wonder. Like I can see that there's kind of like a Wyckoff that they tried to build here. Um, the preliminary support, the selling, or sorry, it would be buying climax, automatic rally, secondary test, which could come down like this and end up back into a new high again after. Maybe a giant triangle in the middle. But what's funny about that is it's supposed to come down, and I don't think it will. It'll come down into the Wyckoff and so on, but I think it'll ultimately fail the phase E. If it even makes it to phase E, that is, it could fail sooner. Which is like that's what I call a red flag. You know? Big red flag.
I like so I had sort of an aha moment or whatever you
A
want to call it.
eureka moment, yeah.
Yeah. So I'm learning the way I am, but so I've just realized that the angle of the line that we're putting down, the trend line or whatever, is actually a function of time, rise over run. So
Yep.
0, we get a horizontal, it's infinite time. You get 1, it's instant time.
Yes, so steepness is weakness. That's the way I remember
Haha.
it. Because you cannot stay with the trend for long if it's too steep. It's actually weak. And the thing is it's contrary to popular belief because people see the huge move, they're like, "Oh, this thing's huge. It's never going to end," right? But little do they know every trend like pretty much ends on the short term. And like, you know, unless we're talking about trends that we aren't a part of, like the one on the yearly or something like that. I mean, we it's not relevant, you know, on a day by day basis. So all the trends that are seem to break pretty frequently, and they all have their time. And the steepness does come into play. But I do understand the way what you're looking at with that, and it's good. It's good understanding, yeah, to have. Very much so. But yeah, no, I've pretty much just taken it easy now with this. I'm like just chilling. Because I think about it, I'm like, I look over at this and I see a green zone. I see we've made a giant spike on the bottom of it. And I'm like, how do we make it through green zones? You know, like we grind them. We can put a siege node on there. I'm like, look at that node. Does it want to be bigger than the POC? Because it can be. That was a POC built on pre-market volume. Nothing like what we can do right now, especially if we spent, you know, this much time here again. That would like what, like 15 minutes or something, get us to the blue line, and that would make us bigger than the other node. I would like to think at least, unless some, you know, the volume drops off the face of the earth, but it shouldn't. At the end of the day, I think that the VWAP is causing this too. Like before, I was like, yeah, the VWAP could cause some trouble, you know, make us slow, and it made the spike. But I'm like, could we make a spike on top of this consolidation the same size that we made below it? It would be like a triangle separating the a triangle separating the consolidation on either side, like this. Basically, sort of idea. Okay, hold on a second. I can't help but notice that it decided to do this in the morning. It went sideways with a big spike, and then it was able to go up, and it came down to try and test the spike, which is okay. I mean, you know what's funny about that? It's sideways up, sideways down, then up is a bearish pattern. It ain't going down. Like this is a bearish pattern too, you know, because it's bearish because it makes an uptrend, and unless the uptrend holds forever, it's breaking. That's my theory with it, you know, because it's very likely, like the past 3,000 trends that I've put on there, they've all broken, and you know, I can see it's more frequent to actually get the pattern up here. So yeah, no, the red zone will have to break to make it even. That's another major consideration I was just thinking of. You know, we've seen it rise on W's many times, and a W is a bearish pattern. Not just because it makes an uptrend, but because it has a designated profit target that is lower than the point that you're supposed to enter when you trade down. Yet, the majority of the pattern's movement that we can see here is upwards movement, like the idea that, you know, you trade after the upwards movement has been had and expect it to be taken back. Same thing with rising wedges, which, I mean, undeniably the yellow and the red, the yellow and the blue top line do look like a rising wedge.
Oh, here we go, hitting the red. So.
Mm-hmm. Like a rising wedge style. So we are pumping through the top though. That's very, very clear. Big fan of it. Big fan of it. The red zone's getting its response. It's hard for it to be even in a case like this, but it just denied the gold bar too. So I mean, it's done a lot here. We've managed to not test the B point. We've managed to spike through the gold bar. We've managed to break through the green to get to the red, but not make an attempt at being even. Now, you want to know what freaking me out right now is the fact that we have this spike, and if we did it on the top, it would be the 188-200. So that's a pretty powerful level up there. And combined with, you know, a bearish pattern, this pattern right here, like it's bearish because the last thing to happen is for it to go here and for it to come into the middle. This move can continue down if it wanted to. So it's like it's already started the move. It's something that literally ends with a high and ends up coming back to the middle because of that high. How is it not a bearish pattern, right? It's as bearish as a W that comes back to its middle too, right? Because it's the same kind of idea. This spike could be separated by a triangle, and that could be happening in here. Of course, we all can see the value of understanding just a simple S wave, because the S wave happens in so many other patterns. So it's good to have an understanding of that. And how important it is for it to come back to the mean throughout those patterns. Be important. So we're in the red zone. Grinding it. We've made a triangle that was relatively clear inside of the green zone before. We can take a look at that triangle. And, you know, sometimes we like to see the consolidations throughout the day have similarities. You know, sometimes we'll find them in other places and so on and so forth. It hasn't really been open for too long, so we haven't really seen it happen too much. And thankfully, because it's a way that it goes sideways, it's not a very good area to really be trading when it is increasingly getting tighter in its range. Like a triangle itself, if we just go over this real quick, the triangle always, it's one of my least favorite patterns because it infinitely gets smaller moves until it's finished the pattern. The best thing about the pattern is when it ends, because I mean, what do you like trading this? It's terrible, right? And if you catch the beginning bit, good luck if you even recognize it as a triangle, because it doesn't even look like a triangle until it starts to really get crappy. And then when it starts to triangulate, because like look, remember what I just put in there? It was kind of like an N bouncing back and forth off of each uh, level. And I mean, by the time that it looks like a triangle, it's doing crap like this, which is nearly just terrible. And I'm like, well, this is the profound impact that a triangle can have on a trend line like this. Not that this trend line has been very good at breaking at all. We went over earlier how many times it actually didn't break throughout the process. It's been borderline terrible. But the first time that it ever hinted at breaking, and it offered a little bit of, it was kind of like it was fishing, and people bought, they bit into it, and it was a trap, effectively, I guess, as it is for the fish. But that's intriguing that it only allowed them to come back to the area where it originally trapped them. And to a lot of people, that's not good enough, so they'll continue to hold, and it just got worse and worse and worse for the people that are fighting against the trend, at least. And I continue to notice that, only what it does offer, it has been good just barely for the people that started shorting it. So I'm like, it hasn't really came off much for anybody that I can see. Yet, I mean, it's not like it wasn't easy to capture. It just was. I could see where a lot of people could go wrong with it. It's almost like I hesitate to say it was designed for it. Almost, it's like it acts like it's designed to negatively for the public. But then again, when I look at what the public does to try and succeed, it's very minimal, right? Like they don't want to put much time into it at all. So it's kind of intriguing. The expectations are high. So did we make it exactly the same distance? No, we didn't. But we managed to spike out of the top of the red zone, which wasn't anything like the spike that we had out the bottom of the green zone. But returning back to the triangle is something that's pretty normal anyways. I mean, we can see that this triangle itself has actually never been tested, which means that in some point in the future we could actually see the green zone. So it means that anybody that's actually long doesn't really want to drag their stop into this green zone or above because it risks them losing their position just over a minor pullback. And the thing is that's not good because where do you get back in? If it doesn't end up making a significant pullback, which I mean it can, it's not impossible, but repositioning on that could otherwise be another risk, and taking that risk could otherwise be unnecessary for the person continuing to hold, right? I mean, why give it up, so that you have to take a risk? I'm like, it's just doesn't make much sense. I'm like, if it's so risky to hold, why not just make money off of that move if you're so certain about it, right? That's what the hedge fund would say. Literally, it's like, why give it up then? Why do we lose the control? Doesn't make any sense. because I still have to explain myself to myself, right? I explain it like verbally as well, but I have to make sense of it, is what you can say. And if you can't make sense of it, you shouldn't be doing it. I guess that's a really old school way to think, but I think like that 100%. Like all those old school people that have taught me that in my life about other things, I just imagine they'll be on me about it. I'm like, oh god, I don't want that. So I just follow the rules. Which I mean, for the majority of my life, I've been terrible at. Like it wasn't following the rules. You would think I would be the last person saying that you should follow the rules, but it is true that I can certainly see the value in them now, after having broken so many, I suppose. And not even just in trading, but in learning in life. But now it's like, because I've went through all of those hardships, like I can see danger coming from a mile away now. So it's like it's a benefit, but I'm like, if you can make it past all of those dangers to originally learn from them, and they don't like consume you, then you're good to go. But in many cases, you might make it through one or two dangers, but then if one of them consumes you, then it affects your ability to continue learning. So it's kind of very difficult if you don't learn and take the time, which, man, it's clear that taking the time is really necessary, and when you do take it, you really are that much more um, safe, and less susceptible to falling into the traps, because you're already aware of them because you took the time. But look at this 5-wave move, eh? We've got a huge 5-wave move that's happened as a result of this, eh? And it's went 1, 2, 3, 4, and 5. And I mean, I guess it's not particularly looking like my triangle consolidation with a triangle anymore, as we're doing something different to make it even. Because is it not true that it will be, you know, struggle up there? Yeah, for sure. What's up?
So I've seen you in this situation. I've seen you like copy the purple triangle and sort of hover it over the set above. Is that
Yes,
happening right now?
yes.
Are we getting a stack triangle?
Yes, yes, it did happen there. It did happen there. It's just really kind of like, maybe if I made it like that, and I was like, the wick out the top and the bottom, they're just spikes, right? But the majority of the consolidation is spent within the confines of the same kind of looking triangle we had before. Yet it only used half of it. And I mean, like, well, that's another mathematical factor, is it did only use half of it, and we can prove that, right? So it's that's a major consideration now, and if we can prove that, then that means that it has went into the confines and left them using half as much of the time necessary. I can't. You know what that reminds me of? It's just I'm just going through like the facts of the situation. It's not because it necessarily leads to anything yet, but I've seen it back in the day. I haven't seen this for a long time, but what it reminded me of is I actually saw a move like this, where it was like down like that, and it would make this triangle at different parts. Like I would notice that it made this part of the triangle actually up here, and then it would go into making the tip down here, but it would have all of the components like it's hard for me to show it, but this portion right here would have started at a different spot, and like everything was contained within it. And then I could see that it actually moved part of that triangle around. And in this case, it reminded me of it because it looked like what we left out of the last triangle was almost like what it tried to finish in the next. And I mean, like, oh, there's the rest of the triangle. And I'm like, well, this area here it may have been the original idea for it to be a triangle, and the parts may have fit properly with this being the center area, which kind of reminded me of that in a really weird way.
Oh, that's a wild way to look at the whole thing.
It is a wild way to
Super
look at it.
unusual.
Yeah, like this movement here was contained within the triangle, yet they're all like different components of like this bigger triangle that we might have seen somewhere else in the past, which is messed up. Yeah, like that one. Holy crap. So yeah, and I'm like, it did do it in the past, and I'm like, you just got to look back. I'm like, I've seen this whole thing before, and I'm like, because I was just as shocked when it did it last time. I was like, what is this strange method of move? The more that I picked at it, the more that I saw it was actually doing that thing that I remembered. But yes, here we are at the 188 200, of course. So like it puts a lot of stress on this line, to be honest. So I do think, when we simply get a line like the yellow one that we've been using, and it just, undeniably just hasn't been breaking well. And it just hasn't been breaking well at all. And since the beginning of its inception. And I make this other blue line with a red dash line over top of it because I want to emphasize it. This other red yellow line, I can just go ahead and make it like orange because it's used up. It's already broken. I mean, it's significant and such, but it's marked as an old red yellow line, which I like to make orange, kind of like it's burnt out. But because it's never gonna have that same value again as an unbroken trend. Yeah. Anyways, the if this trend simply just isn't working, right? It's not causing it to dump. It's not like it's not going to look like it will in the future, but I mean, assuming that it's going to be the cause of it from here on out, it's kind of tough. Now, I'll tell you one thing. Just like before, we have to break this yellow line in order to ever get to this one. So we consider it only because of that. And it does have a small window with it, but does it mean the trouble's over just because we've broken it? Well, certainly not, because clearly it can break a million more times and then get to the blue and red line. But when we break the blue and red line, what other uptrend are we in, right? I mean, on the short term here, we're not really in any other visible uptrend. It would have to be a new one. And by the time that we're breaking that, we'll have some sort of downtrend. So I'm curious about that. And I'm like, well, look at all of the time we could spend in here. And what else does that look like? It looks like this time. Like it's killing me how similar this time could be to here. And when I draw that in like that, oh my goodness, it reminds me of this pattern, which I mean, I'm not really a fan of it at all, but it does do this quite a lot nowadays. And it's specifically like, let me take it to like this area real quick. Specifically like that or like that. Something can be in the way. And it can be something like that. Something like a like a blue bar that gets a spike on either side, spiking down, spiking up, or like a purple bar inside of a range where you've got a red zone at the top and a green zone at the bottom. Imagine, and the purple's in the middle. Yet these are all things that we've done in the past, and I'm like, if I take this away, we're just doing a spike on the top and the bottom. Um, or if I take everything away and I just leave this, are we just doing a consolidation on either side of the purple? How simple can it be, right? And so that's pretty straightforward. I mean, it's like a shape that we're, you know, one would want to be familiar with in a given environment, you know, to say the least. So I want to talk about these B points we're crushing too, because they're like blatantly untested. Oh, sorry, blatantly untested B points. You know, it's never, ever, ever tested the second one. The first one, it never tested it either, but it tried, and I'll give it that. But that's done, and I'll leave it on for a second just so we know where we are on along that line. Ah, it's still not tested yet. So, another thing we've noticed lately is when we have these old channels, we were, you know, they originally started like this: green zone, red zone, green zone, red zone, green zone, red zone. Same thing happened up here, right? Um, we've noticed that it can be really interested in trading everywhere but those areas. So what we got to watch out for consolidations to happen in between the ranges. Like what we saw the other day, look at the construction of the node. It wasn't very good at it, but it's almost like it avoided the green zone, red zone, the green zone, red zone. You know, like it tried to trade on top. It tried to trade in the middle. And it generally spent the majority of its volume outside of the ranges. Today, I think we're somewhat similar. We're inside of another range, but for how long? As long as we spent in the last one. Well, I mean, it's not a bad consideration actually. But yeah, that weird broken up triangle thing, like that's a brain twister for me. I'm gonna keep looking at those and figuring them out if they're gonna happen like that again. Because to leave part of a triangle, you know, means that we should expect the rest of it somewhere else. So I'm like, okay, then that's not that hard to remember because it's really
Those
simple. What's up?
those are parts of a consolidation, right? So
Yeah,
we're just consolidating at different volumes at different times, I guess.
yeah, exactly. And to the average person, it'll throw them off huge. But if you're looking for it, it's completely different. Like there's 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 a certain aspect to of understanding towards actually looking and expecting for something to happen. And it's like, you know, I'm not saying trade it or anything like that, but like we're definitely watching for it. And if it's ever happening, it could mean potentially a hands-off environment until we're familiar with it. Like, because I'm like, oh, how do I explain myself to these people if I've only seen it once, you know? And I'm like, there's no people, but how do I explain it to myself? You know, I can't, I can't explain it to anybody. You know, I'm like, no, I mean the people that hold me accountable, like at a firm or something like that. You know, but but yeah, but yeah, if I couldn't explain it to myself, I definitely couldn't explain it to you guys. But I didn't mean you guys by the people. I mean these old people that are gonna teach me a lesson or something if I don't follow the rules. That's the way that I think about it. You know, because I have a lot of respect for them. Ironically, that's where it all comes from not listening to them and then learning that I should. So,
That third little consolidation there looks like an even smaller triangle. Like
yep,
it's just stacking smaller and smaller. Or I guess time scale wise, they're getting completed faster.
exactly. Yeah, that's a good way to look at it. And when I can see that something even remotely similar is happening again, but it's smaller, I start to think, well, is it the same thing again? You know, like the
The
whole thing again,
the,
but smaller.
the trend would suggest it goes up and tackles the bottom of that red and then blasts through it. Is whatever in my mind.
Mm-hmm.
it's the 5-way in
Well,
faster time periods too. That's interesting.
yeah, because I was looking at it, I'm like, well, is it making a smaller version like exactly? Because it really could be if it wanted to be. Because you know, overall it made 5 waves, and by the fifth wave, it was already on another fifth wave. And I mean, like, is it? I mean, this is brutal, but is it? I mean, it could be another smaller fifth wave on the fifth wave. And I mean, like, it's not impossible for it to do a 5 wave move that has a 5 wave move here, and on the fifth wave it also has another 5 wave move on a very very small short-term time frame. And I mean, technically, I don't think it can make an even smaller one. Like, it can vibrate the candle up and down 15 times maybe, but or 5 times, sorry, but not really anything smaller than that. So what happens when it ends? Does it go sideways enough to break the yellow line? And after the trend's been constructed like this, it's that much harder for it to make little fake outs like that because it's higher, you know? And at the end of the day, a lot more people are going to be interested in its break, especially from an area like this. So if an area like this can break the trend, ironically, this exact move could be exactly what we're looking for. So it poses an interesting hedging point. And if you look here, that level is exactly the medium point for this to be an S wave. And out of all of the times, statistically, what level is it supposed to reverse off of? I mean, the 188-200 is incredibly statistically probable, as well as the 261. And the 261 does offer more money than the 188-200. But one thing that we have to understand is it doesn't mean give up this long trade at the bottom. I think it's really worth a lot. But I even think that shorting this 188-200 is actually risky, because fear is fast, in my opinion. You know, well, if you look back at times where it was dropping hard, you know, it drops so hard it doesn't pause for people. You know, it's very very harsh about it. It doesn't come back for retests. It's just very unforgiving, quick in nature, and then the upwards movement can be very very gradual. You know, and that's why I say fear is fast and greed is gradual. And you know, stairs up, elevator down kind of deal here as well. And there's no fear here yet, but the yellow line breaking could really cause fear. I mean, ironically, it's not something that it'll get from today, because it hasn't caused any fear today, unless you call this one. And I mean, you want to know what's funny about that move? Is it actually could happen. Because when we were looking out um, at this move earlier, the only reason why I liked it is because it was exactly the same distance away from the consolidation as this one. Oh my goodness, I'm actually seeing something very similar to what we saw here. Because what we did with this move is we took this and we doubled it. Could we get this here? That really does obviously that could happen after. But it's not like it wouldn't be appropriate. It's a giant risk for sure. So I mean, one thing is we understand that this can never happen unless we break the yellow line, and we can never get to this level unless we break, you know, this yellow line, and it's basically the elephant in the room right now. And you know, to a lot of people, the sideways grind will make them look out the window and so on like that. Where to the people aware of the power of this trend break, um, like I think this trend, like we may have seen it in other places break. But for instance, like even just looking at this last area over here, it's not even as steep as a 75 degree. It was 49, and it was more than capable of taking back the entire move and some. So it just goes to show, like, the current market environment, it's a heavy ultimatum. Now, you want to know what's funny about the idea of this move being the same distance away from this triangle as what we did? Like that was the idea right there, is that if we make this distance again, we've essentially made this pattern, right? And this is the same distance away as what we had down here. And I'm like, well, okay. It didn't return back to the medium point. It technically has untested B points left across the board. There is no doubt in my mind that this move was constructed on the squeeze, on a squeeze. Like it definitely had the people where they wanted them early, and then it built on it. But it's a serious day where you could imagine the institutions are going to be interested in protecting themselves for such a risk of tomorrow. Like tomorrow's a huge day. Got Google and Microsoft earnings, two of the biggest companies in the world, basically. Yeah, it's like, gosh, what would we do if we never had Google and Microsoft? I'll tell you, it'd be a completely different world. So that's the power of people's understanding of these companies. They'll be interested in finding opportunities and things they're familiar with. Now, this, like I said, it's not worth giving up your long trade for, but it's meant to scare you out of it. And the closer we get to the risk of it breaking a trend line, the more interested you could be on hedging it. But it's not making it easy as well. Obviously, the sideways movement, as I said, is not fast fear. So is it trying to make people short it so it can stop them out and then go down? That becomes an interesting question. Just like think about how the low was created here. Like it had everyone convinced that it was going up, 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 up. And then what does this move do? If not take everyone's position from them before going to their target. You know, all these people right here were put in a really tough spot by the time it was doing this, just to have it go to where they thought it would. Because anyone associated with this upwards movement was clearly looking at it returning back to the higher levels, yet the market treated them like this prior to returning to those levels. So is it true that, you know, we have to, if we see something like this, we could assume that if it lacks this, it could have this? And if it's having that, we could assume that it's because it wants to take these people's positions from them. Before it obviously broke this line. This line was a red yellow line, you know. Came all the way from up top here, eh? And like this is how it treated the people for that trend break. People that had exposure to that trend were treated like this prior to its break. And yeah, people would come into the morning understanding that it has come down a lot. Then they will think it is bearish because it's treated them negatively. And it's like, of course we get movement like this. I don't doubt that it's the exact inclination of certain parties. Now, hold on a second. If I take this over, right? Just the whole thing. Is that not the same thing? Intriguing for. What about this? Now, of course, remember the B point. It is tested now, finally. The 188, 200, as I said, stopping everyone out. You can see the volume at the high of the move. But it's not because it wants to stop them out for a squeeze so much as steal their position for a hedge. It's trying to accumulate a hedge. The green zone could be seen again on the break of the yellow shortly. Also, keep in mind the next few fibs. The 261 surprisingly actually at B points that are untested. And look at those things because really they've never been. I guess this one has been, but this one on the other side of a gap and everything. Good to have an understanding that there is a node there. The green zone and red zone actually shows a pretty good representation of that gap, I would say. A B point right at the high of the I'm gonna grab a coffee real quick.
Oh man, I walked away and it did the thing. fake out dip, I think.
Oh yeah? Yeah, I'll be right up there.
I just like our trend lines. I don't know. I just feel good about it. And that's the worst
Nice.
way to trade.
On the node right now.
Sorry, what was it?
What have you been? What do you mean?
Volume node. Like it spiked above it, like around the red zone there, and it just came back down. Now we're just kind of hovering on the volume node.
True. How you doing, man?
Good man. You know, a lot better than it was.
Good, good.
Got some NyQuil. Slept straight through the night.
Oh man, that's the stuff.
That's the stuff. Oh yeah.
I go for the straight up green kind. You know.
The green kind?
Yeah, old school green flavor NyQuil.
What?
Yeah. There's like, I don't know, it just tastes like medicine.
Green flavor.
You only got the orange and the blue.
I'm old.
I faintly remember a green. 1 second.
Oh, it was like, it tasted like iodine and medicine. It wasn't a great flavor.
Iodine? What does iodine taste like? And why have you tasted iodine?
Iodine tastes like it smells.
Oh. What you been exposed to radiation?
No, it's what we used to put on cuts.
Oh.
Isn't iodine orange?
Yeah.
Yeah, I've never seen it.
Surgeons use it. They smear it all over where they're gonna make the incision.
It kind of looks like blood, but it's not. And yeah.
Oh, interesting.
You're not allowed to buy it anymore because of meth.
But they make it out of it?
Yeah.
Jeez.
I mean, I think anything, I don't even know. Bunch of crap I'd never want in my body. Know that.
Yeah.
Although Breaking Bad was a pretty good show.
Yeah, I watched it time ago when it came out.
Yeah.
So, like, I can't help but notice that the association with the consolidation that we had here was relatively the same kind of movement that we had in the last one. And I can't help but notice that the appropriate size of the node that we had before the spike, it was roughly like this big. And that's like how big we made this spike. Hold on. Controls that. Curious to see if we make a node of similar size here prior to making a spike of similar size, just as we did last time. Because one could say that that consolidation was the appropriate amount of consolidation required to make a spike of this size. Just an idea. You know what? I think it'll try, and the spike might not be exactly the same size. Last time, when we made this spike, it made another one relatively similarly after it was formed, but it didn't make the same kind of lunge like it did originally. And that's fine, but now we've went to the spot that's exactly the same distance away from that spike. Yeah, there we go. And essentially, this spike has managed to double get to where we are. you know, everything that we've done past that point has seemingly just been wicks and spikes. And I'm like, okay, uh, what is that spike? Is it the same spike that we had before the consolidation? Because we had a consolidation here, and it made a move roughly of this size, you know, same size that we made originally. So I mean, I can't help but notice that the components could be similar. After all, this triangle, I think, originated in this environment. So, like with this one, I it seems strange, but we have another component where this is in play, like here, right? And then we have another component where this is in play.
Huh.
It
That's funny,
reminded
yeah.
yeah, it reminded me of this here. Kind of.
It's like, yeah, it wants to do the little triangle thing, but gets lagged out or something. I mean, not lagged, but you know.
Yeah. Yeah, the whole sequence here too, like I can't help but notice that phase A can be found across the board. Like when I can see that it started in a consolidation and then it ran away, came back to itself, and then left again. That N is exactly what we look at nearly every day because I'm like, well, I recognize the pattern very frequently, and it's in the entire schematic. This portion right here is very similar to what we've done here, basically. You know, where I always like to circle the PSY because it's like a little, it's like its own like little support barrier that started everything. It's like a little mini consolidation. It leaves it just to come back to it and then goes away from it again. And I'm like, well, that is undeniably the same sequence that happens in, I mean, almost all over the place here. Like I see it happening here, and so we have the smaller notch, and it leaves it, comes back to it, and goes away from it, and it happens again, just like that. I'm like, well, this sequence, you know, there's a couple times that it did it in here even. Like it started this sequence with a notch, left it, came back to it, went away from it, and in that time it actually came down and did the next part of the move. It went down and then started to grind. Didn't manage to come to a new high again, but I mean, at that point, it actually came into another sequence. But you can see that when we finish this point right here and it manages to get up to this high, phase A ends and we start to get involved with phase B. And sometimes phase B just doesn't happen. Like in this case right here, if it was supposed to continue after the N, uh, it would end up coming down hard to a
You
new
know what I
low.
like here?
But
I like the symmetry that happened at the spike here. We've got almost a opposite triangle going the other way from the high there. I think
oh,
it's cool.
yeah. Yeah, it makes me think about if we have a 1, 2, 3, 4, and 5, and if this has a move here, and this has a move here, and these moves start to become so particularly similar, we're left with this area in the middle. It has like a gap in the middle. Because there's only ever been this tiny move through the middle. And we kind of have that going on right now with this one, in a weird way. The risk is undeniably still there for the break of the trend. Now, the one thing that I noticed about this trend break, not only did it come down a little bit, but it managed to go from the red zone to green zone, and it managed to sit on top of the node that we created on the green zone. And I'm like, well, why do we make nodes on the green zone in the first place? Well, we like to make a siege on the environment. Like I like to call it a siege because in a very similar respect, the green zone and red zone are barriers to a confined area. Otherwise, like a castle is the confined area that you otherwise want to get inside of. So the object, the price that has to get inside of it has to exactly throw everything that it has at it in order to build this kind of node that can form on the green zone. And I think it's really important to do this because when we do this node, it fires up to the other side of the range and it's got something to come back to because it's actually built one of these things. It's built an actual node there. So when it falls back to it, look what happens. It actually responds to something. So the people that didn't have anything, they have the node now because we made it today for them. So they understand at least why it's happening here. So if they don't have a range, maybe they can draw one kind of thing. And it's like, because they'll make it apparent by 4 or 5 moves into the range that it's actually doing a node very similar to the one that we had before. And ironically, this node that we had before, it was great at spending time in the middle area. Not so much the extreme. So we could get something like that again here. Holy crap, it's the same range. The red zone and green zone. So at the end of the day, that's a really good way to but see that most of the volume was like centered around like being involved with that node right there. And essentially I can't help but notice that like if I just go and take it up here like and put that on there, it's like that's the area where the majority of the price is spending. And what happens outside of it is just seemingly wicks and spikes. And I'm like, well, I can find the similarity here really, really easily too, because if we look at what actually just happened, it was like chopping, and then it ran up, and then continued chopping, and then it went down. If I just change that to like red and move it over, in a very rudimentary analytical analysis here, we can see that the idea that it spent the majority of its time in the red zone and it literally spiked out of the top and the bottom, which gave it a downtrend that otherwise doubled.
Hey, John, how many NQ did you take initially from the bottom?
Just 3.
How come you cut off 2 about 10 points in or 15 points in?
Because it
How come you
was
never waited until it went up to the B point?
first trade of the day.
Oh, really?
Yeah.
Okay.
So I'm like,
I thought you were short there or something. I go,
no, it was first trade of the day, so I was like, I was kind of like taking it easy.
okay, good, cool.
I thought it was gonna be a quick trade and it was gonna come and stop me out. Like you know what I had on there? Like I literally did 3 and it went 1, 2, and 3. And when this one sold, what I did was I turned my stop, which was here, into 3 sell. And I only had 1 left. But I put a take profit order of a buy here. So if it reversed, I was gonna be taking profit and short. So I was looking to pull that off, and it never came down to get me. because I thought that it was actually going to come down and smash me out, but I was like, I knew I wanted to continuously have exposure to this line, like for sure. But my idea was is that it could actually take some time to do that, but instead it just managed to run away. And I was like, okay, well, it ran up, and the first thing I was like, I can't take any offs. First thing I'm gonna do is start hedging it, hedging it, and hedging it, and keeping complete control because I felt uncomfortable. I felt like I needed to have control, right? And like because we've been
Yeah.
like, look at this whole move in the first place. It just came from doing that to people. I was like, okay.
I was only 200 too, right? 'Cause
Yeah,
I
yeah.
saw that when it come in,
Mhm.
and I figured, well, I said to myself, I hope it comes down and it does that double bottom thing, because if it does, then I'll try to get in here and take it long. But that's what I was hoping for, because we always have them, in the shorter time frame. So why can't we have them on the 15-minute?
Mhm.
Yeah, I'm looking more to the higher time frames, like
Yeah, let's take a look at that. Let's take a look at that.
5, 15 hourly, just to see where we're at, see if we're going to be still going up or down, or if we're hitting major fibs. Because it's, you can catch something on the bottom there. It's a major fib, and it's coming off at 261. Good shit,
Yeah.
we're going to take that up for a few points.
Yeah, I find it really interesting that it can come back to the trend line that it originally broke as much as it did. It's like this is a line where, I would typically make it blue and yellow. And it's like this is kind of how it acts when it's ending its relationship with it, from what I can see. And it's like the line that originally struggles to break can be the most powerful line when it truly is finished. And we can get past the original point of its problems, and that would be this point here. And it's just like that major red yellow line from all the way, it goes all the way back here really, but at the end of the day, that major red yellow line, it's like it had its first major negative response. It's like we saw this motion again off of that trend line. And I think that, out of all the channels that we've seen everywhere, this kind of angle, it's very likely that we're going to be interested in testing this particular gold bar. Like, I think that it's very interested in actually coming back to test it from the underside, like it did before. And it seems like it would be so obvious on this chart, but I don't think many people have this kind of chart where it's going to show that barrier, because the barrier keeps dropping. Just like this red yellow line does. It keeps dropping. And, this is a steeper line, and obviously, it's harder to kind of maintain a relationship with it as it was here. But the medium gold bar is not as hard. Like we can do things like this in there. Like it's respected at that time so much to be able to move like that, and we could get that again. It's something that can happen clearly when we're associating with that line. Like it's almost like it happened here, not as well, but the same kind of confinement area, and maybe not for the same amount of time, was definitely happening surrounding the responses to the gold bar.
Where are we in the Wyckoff now, do you think?
That's a good question. Let's see here. For SOW in phase B, I mean, we could be in this phase here. Now let's take a look actually. Alright. Yeah, in this phase B area.
Yeah. Okay.
So the thing that this phase B area has in the schematic and on the chart is like a lot of time to be able to get to this trend line. It's like we can have a support and a resistance in there. But I think that, you know, there's a major, okay, like even if we're at this point or at this point, the next major consideration is to try and rally through the highs. Now, I'll tell you one thing. The UTAD can be like this. Like if we're to get into this consolidation, there could be this major area in here, like a giant triangle. Like that would be like in there. And we lead out into this. But what it tells me is that when we are in these areas that are at the lows of these schematics, the one thing that we can be interested in is the break of the downtrends to try and grab these new highs. Because in this case, breaking the SOW to get to the UT, that never happened. Like the UT never happened. So the question becomes, can we be in this point right here? Because we've seen that lately, most Wyckoffs like to end here. And in this case, it's managed to make one extra move, maybe two. It's weird because it didn't actually get to the UT in phase B. So is it truly even doing this? Becomes the question. One thing that we can say that it is doing is it's respecting the channel. Originally starting with actually a W and making an M, where the B points, I mean, this being a preliminary support, it's kind of like a consolidation, a triangle maybe. But basically that M formed, and then we could see a W formed after that M, and the B points are all crossed across the same medium point here, the same gold bar. And then we did another M, and then another W, where it too had B points along the gold bar. And then even recently, our most recent M, which could be considered even now. What about the fibs on that? A 341, eh? Oh, no, 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 no. That's not drawn properly. A 288, more like a 261.
Yeah, that's what I was looking at this morning.
But another thing that intrigues me about the way that it's done this on the long term is it's fallen through the 188-200 and then came back to it. And then this is the second time we've come back to it. So could it get a grind and then we step on top of it? You know, one thing that could be really easy to form on a long-term time frame like this is actually the pattern we started with today. But then the major question becomes, you know, what was the power of coming up on a W? Well, it came down on an M. Could it rise again on a W? What's the value of getting to this medium point that seemingly causes all of the W's to have a B points and all of the M's to have a B point? Could we make another one there? Because it's not the people that are going to be aware of this, so we can assume that it can continue to work without their understanding. So like one thing we can see is every B point has been across that level. And if there's one thing about it, is it's getting harder and harder for it to make new advancements and maintain a relationship with this gold bar. Because I'll tell you one thing, right? Okay, look in this channel. How many times have we went down, right? Each time we go down with a certain advancement, and it seems to be pretty characteristic. What's going on with this one? Why didn't we go down so much, and why did it happen so quick? And why are, you know, what's going to happen with our highs? Are we going to go down as consistently? I don't think so. Our lows are starting to change, and they're starting to flatten out. And why is that then? You know, if you think from a perspective of somebody with the expectations it's going to continue, they'll have questions to ask, and those would be some of them. You know, like, is it not a risk that it's not showing the same kind of advancements to the downside that it has within the trend? I mean, that's a question. It's a valid one, and I mean, it can be argued, but it is it's like a stain on its ability to continue doing what it was doing. I mean, it's clearly a big change. So let's see. Oh, excuse this chart. Which goes to show how high the VWAPs are. They were so high it had to stretch the chart out. so much like that. Now I can't help but notice. I'll get it back to this actually. The other fib sets up top, right? What is this up here but a white dash line? We have to watch out for the white dash line. Everything seemingly bought back up to it, and that's not the only one either. There's one all the way up here at a 200 apparently. I'm gonna move these over because we'll see them again. Earnings is coming up.
Yeah, I think Microsoft is tomorrow. When is Google? Do you know?
It should be tomorrow too. Let me check the
Okay.
time. So Google's October 24th, yeah, tomorrow, and they are at 4 o'clock. Well, they have two. I mean, 4:15 is another one. So Google, they can pick and choose when they want to move, really. 4:05 though, Microsoft's going to be releasing for sure. So not too far after the bell. The only one that really has me waiting is Apple. And that one is at 4:30 on November 2nd, still a ways away. And Nvidia is going to be late in the month to the 21st at 4:20 though, so they're a little bit later as well. Worth waiting for though, I'd say. Oh yeah. Apple's 4:30 on the 2nd. They're worth waiting for, yeah. Other than that, we got 4 o'clock Amazon on the 26th and 4:05 Meta on the 25th. Okay, so this blue line, it actually does put a lot of emphasis on the red-yellow line. The more that we get used to breaking it, the more that we get used to using it, the more the red-yellow line starts to become, I guess you could say, attractive to get involved with the situation. But the 227 is like, why the 227? It's not normal, really. 241 is more normal than a 227. The 227 is probably, I was gonna say, as I'd say the 127 is even more common than the 227 to actually get back to the B point. But we shall see. This is a consolidation. It's managed to make a spike out of one side, not the other. And that was the case with the previous one. But a spike in the other direction. And you could say two. And well, hold on a sec. So two past the range, but one inside of it. So we had 1, 2, and 3. It does truly make for a third drive, so we must be aware of the first of the 3. Now, of course, to get back to the first of the 3, it has to get back into the range. The first of the 3 is basically this giant node. And I mean, that giant node could end up being the POC. After all, I look at our average consolidations. We really haven't done this anywhere. Next time we do, though, I mean, this is the closest we've ever come, I suppose. But and it's not completely finished with it yet, but it is rather appropriate to create something of a similar sort to this. And I'm like, what's up with the ATR at this point of the day? We've fallen off nearly back to the beginning of the pre-market session. And I mean, does that mean that our candles are nearly the same as what they were at that point? Because I mean, it's showing that seems to be the case. So I mean, with candles that size, maybe a consolidation that size would be more appropriate. Because if the candles are twice the size, how are we supposed to make a consolidation that looks like that one? You know, that's a good point though. So decreasing the consolidation size, candlestick size, could make that consolidation more probable. But I'm like, in here, like that was officially a dead zone, really. I mean, it really didn't make much of an effort to use the range at all there either. And I'm curious what kind of impact the white dash line can make. Because clearly, in the past, when we were moving down in this move, everything came to an end just to come back to the white dash line before continuing. Cannot help but notice. And that's the white dash line. And with all the volume that we've had in this consolidation, we can only assume that there's going to be a giant node in here. So what's it going to look like to get back to that node can become the question. Because we haven't ever tested it really properly. Even this didn't make it properly. There's a giant gap where we are right now, actually. You can see that outside of the white dashed line, there's a giant gap. You know, a bigger gap than any other gap on the screen, as a matter of fact. Yeah, no other gap manages to go to as low of a volume as this point right here. So it'll stand out. We're knocking on the door of that gap right now. The other side of it, there's a point. And at 261, interestingly enough. The end of the gap is just past the 261 too, so it's like inviting to try and spike past it a little bit. So let's watch out for wicks and spikes to get on top of that 261. I like the idea. If it runs past all these levels, it's that much more likely to come back to them. If it grinds past them, that's when you gotta watch out. Look at this movement here, really. When we were going slow here, chop, 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 and then it started to speed up. What part did they take back? They didn't take back the chop, did they? Because they were like, oh, you didn't find this attractive. You only found it attractive here. They took that back. Because that part was the part that was exciting. The part that people were late, and undeniably, and they wanted the scraps of somebody else's project, right? And I guess that's just not allowed. Because every single time that we can see it speeds up, you know, it distinctly comes back for the people that got excited about this movement, you know, and these people. And it can build on that too, but when enough people have flooded in, then it just has to flush the toilet, right? Basically. And it does that and steals all their positions. And it's something like what happened here, except by the end of the day, they couldn't get everyone out of the way. You know, a lot of people will be, you know, interested in being exposed to these earnings reports, and a lot of them can only go long. More and more people are being, more and more people are getting the ability to take both directions now than ever before. The white dash line was ever so particular. I think this is trying to egg people on. Personally, the B point that's just been created is a lot of a tension. Might require a secondary low before getting back to it, just like the M's require W's frequently.
I was about to ask about the MW on this.
Hmm. Yeah, yeah. It seems to be liking it a lot lately. But then sometimes, on the way up, we've seen that it's, done things like this where it's like I'm making it, but then I'm not, and it's like, whoa, that's
Yeah.
that's dangerous. And then sometimes it does things like this where you can see it does two W's in a row. But there's only so many shapes that it can make, right? So it reduces the variables. Um, if we can familiarize ourselves with the shapes that it can make, and then watch for them to form as we know them. And of course, like one might think, oh, this is a tiny area with a tiny target. And it's like, well, it is. And I mean, you might not be comfortable with that, although it is totally tradable, but it's not exactly the best trade in the world. Think about how high it is, for instance. There's a lot of risk in buying so high into the area. So precautions will have to be taken. You'd have to make sure you use a tight stop and everything like that. And make sure you take off enough profit when it hits the target and so on. And secure your stops and so on. But one of the major things about it is it's like, well, what if it doesn't, make the same sequence that we've seen it make? What if it struggles with it? And if it struggles in the short term, we can get an idea that, it's factually changing on the short term. And if that's the case, we can continue to look for however it's changed for some of the bigger patterns potentially. Or like, it just changes how we can think about the situation, and develop an understanding of what's going on and why that change might have been required, or what it has done, like as a result of it. Like for instance, this move right here, what it did do as a matter of fact is it's readjusted the support line, so that now it's not this 46-degree angle. It's a fact that it's a 43-degree angle. And through doing this, really, it hasn't a change to much time. To much price action movement. It's pretty much at the same level it was at, half an hour ago or whatever. And then it's like, but one thing's different, is it's now a 43-degree angle. So at this level, with things different by that much, what changes can we see? Becomes a question. It's just a logical way to look at it, right? So with the new changes, how does that affect the current environment and the way that we're able to traverse it? Because if things are different, then how's it going to affect our movement? It's like if you take any kind of object in physics, and you're like, all right, well, the environment of the smooth hill, you just roll the ball down and it'll go fast. But if you add grass to it or something, it's going to change the environment, because it's affecting our object differently. And the more barriers that there are, they can affect the ability for it to change, because we run into more things that can make us change. Now, if there's more barriers, then there's more things that can make us change, is what I'm trying to say. And the more things that we have that can influence change, the more aware we have to be that there can be change. And sometimes it's clear skies until a particular level that's otherwise obvious. Now, sometimes that obvious level can run into a bunch of minor barriers. It's like literally, it's like it had an excuse to run in to almost every single thing that was in the way, and choose to step on top of it. Like anything that was in the way here, it ran into it, and then stepped on it. But anything like, like the yellow bar, ran into it and then stepped on it. And then the green bar, it ran into it, and then tried to make it into a support. Red zone, not so much support, but that's okay. And we can see it continuously tries to step on the things that are otherwise good for stepping on. Like red zones they're good for holding us back. They're good for coming down off of. Not particularly designed for stepping on, yet they can be stepped on. It's just where you would expect there to be more volume is a place like a green zone. In an environment like this where it goes back and forth, the green zone was used as the area where they like to buy. Now notice all of the volume on the green zone here. And then here it was a little bit higher than the green zone because they actually wanted to make sure it was a support. That's absolutely fine, but still, majority of the volume hangs out at the green zone. And in this case, this was an incredibly older range that was not related to these two other ranges. But the green zone was certainly. And now I'm like, alright, well, we have a high with a higher high and a lower high. Ironically, this pattern right here, it's very similar like to an all-in-one head and shoulders. Because all it has to do is make a little bit of a downwards move, and it looks like an inverse. I can't stand it honestly, but it does it personally. What was up?
Hey, John. Yeah, I just thought I'd mention that since it's an up market, um, every time the 15-second RSI hit the bottom,
Oh yeah,
good to go. Good to go for points. Once
interesting.
it hit the 30 or lower, a couple
The,
times, it did a double bottom or whatever. This time it's just kind of just lifted off from the bottom. So every time that 15-second hits the bottom, when the markets go up, when you know the market's going up, and you can look at the higher time frames, you know it's going up. Then if you're looking for an entry, that's a good position for an entry. And the reverse works too for down markets. So something to keep your eye on. But you're in the money on every single trade that you made this morning if you got in, not at the very bottom. If you're looking at gaining entries other than the bottom, and you know what's going up, then it's a good place to look.
yeah, and it's like that process starts when it has made the bottom, because you can see like it's hit green
Yeah.
zone before underneath here, but that just doesn't mean anything, I guess.
Oh, as soon as it starts going up, then you
Then
know
you.
if it's yeah.
Oh,
Because we started off this morning when it spiked there right at the open and started going down. It hit the top of the 15-second RSI and just popped down. And so yeah, you basically have to wait till it basically transitions into an up market, and then you can get in on it. And make sure it's off of it's usually off a major fib anyways, and it's usually very short term, 188 or 200, and then just take it from there.
mm-hmm.
But it's been like that consistently. When the markets go up, it does that. Don't know why, but it just does. And it's the same when it goes down. When we're in a downtrending market, um, whenever it hits the top of the 70 and comes down, then that's an entry there. Because it's always around the bottom when you're coming down. So when it comes back up to the 70 on the 15-second RSI, then yeah, it's a good entry.
Yeah, I see that.
Yeah, that's 15-second RSI on Ninja is freaking huge. It's valuable, very valuable.
Yeah, I like it.
It's just another confluence, but it's a big confluence for me. Because I add it with a fib, and you do the same sort of thing. You look for the spike on the bottom, or whatever, and then you don't want to be chasing it up or whatever. You either get the bottom or you don't, and then you just go from there.
Yeah. Yeah, so I do want to look at it when it does break the trend, and when it starts to go sideways, because I think what we're going to do is actually break the trend into going sideways instead of actually going down. And when we break it, whenever there's any kind of change, just when it's basically put the foot down and it says, right, it's not going up anymore, whatever it does at that point, whether it drops or it goes sideways, what does the RSI do when it hits the green? That's going to be something. What is the situation? What does it all look like? Like, how did it treat the yellow, you know, before ending everything, before the final change? And is it visible? Is there some sort of ending signal? Or does it get bad at it progressively until it ends or something? Because that could be something. I mean, like, maybe it stops, trying to hit the green as much and starts to lift off of it, and then eventually it just doesn't seem to have the juice to get to the green or something. Or I don't know. I want to look for whatever it does when it does change, because obviously it's not going to go up forever. When it stops, um, what does the RSI look like? And can there be a signal out of it potentially? Because it's clear that every time it hits the green zone, it does carry on, but when it ends, it undeniably will get to the green zone and go lower though at some point. So I'm curious to see what that looks like leading up to it. Because each time that you do it, it does get inherently riskier, right? Like,
It does. It does.
yeah, yeah,
As
yeah.
the day goes on or whatever. But I
Right,
look at
right.
the higher time frames, and there's going to be like a retracement or whatever.
Okay,
You
okay.
look at the higher time frames, like the hourly, and say, okay, well, if it comes down to that, okay, great. Comes down 100 points, whoop-dee, I'm still in for 150. You know, um, but just to see what it looks like.
Yeah. Okay, okay.
And if you're ever thinking about cutting a position, saying, oh, geez, I'm only 200 points in, should I cut it? Have a look at the higher time frames. And are we going to go higher, or and if you look at the higher time frames and you're looking at as if it was a 1 minute, would you cut it if it was 1 minute? Probably
Yeah,
not,
I love that.
right?
Yeah.
You
Yeah,
wouldn't
man.
cut it. You'd hold it.
Mhm.
So that's what it takes to look at the higher time frames sometimes. When you're in a position this low and you look at the volume node where we're at, we're still in the yellow on the bottom on the hourly. Like, we're not even in the red zone really in the hourly yet. So
Mhm.
on the volume. So just another confluence. That's all.
The 241 and the white dash line. Like now, the way it made it was that it has a grindy node on top of the 200 188. Come back. Test it. short term, and so on and so forth. It's slowly grinding on top of the support that it's otherwise made along the way, the entire time, grinding it, and it's fine. Controversial yellow lines in play though, undeniably. Set up in a different way this time. You know, one that's been more effective each time we break the yellow line. I can't help but notice that it is truly getting better at breaking. And each time that we try and advance, it's not the same as what it used to be. It's just a small advancement. Until we got to the white dash line. What's happened to the advancements? They've pretty much been cut off at the white dash line itself. I'm curious about that. Maybe the way that we advance beyond the white dash line is different to the way that we advance to it. Definitely be watching for changes beyond the white dash line. White dash line typically could get a node. Because if we get a node here, what happens? If we get everyone to short it here, we get to short it, short it, short it, short it, short it, and then we put a little order in, stop every single one of them out, they're all buyers right here. And it could push us through the range. Or we could grind the red zone of the next area, which is the 261 area. I like the idea of coming back from the red zone to test the 261 from the other side. Like that. And I mean, it could be this move. It could be. Is that move the move that we have from the red zone to the green zone? I mean, it very much looks very similar. I mean, it's not far off. And why is it even important to get there? Well, we've never tested these viewpoints. So that's how I can explain myself. If you want to say, all right, well, that is the, why is it worth even looking at anything higher than here? Well, there's levels that it otherwise tried to get, but it couldn't because of the level that we're stuck at now. And when we were stuck here before, what did we do to get through this level? Well, we managed to make wicks and spikes, and that's dangerous. Making this little wick and spike like we did before is dangerous. I mean, we want to make sure that we make more. We want to make sure that we do something different, because that otherwise showed that we're capable of making this kind of movement. That's terrible. That's a lot of movement to the downside off of that little spike, wouldn't it seem? We should get something different. Here we are trying to make the little spike. Let's see what happens when we get to the point that it did before. Let's see. How far above did it get? I mean, it managed to almost get to the purple line. Or hold on, it did. It did manage to get to the purple. So now we know the spike is pretty much the purple line. And we're, into the green zone here. So the purple, not quite yet. And just to keep an eye over here, some of the most important fibs that we have right now are these ones over here. Most current fibs from the day, right? To an untested B point that tried to get hit off the 141 but didn't manage to get all the way. And it never came off of the 127 to get all the way to the B point. So one could expect it to be untested. And the same trend that started the entire move that got us to where we are has not been responsible for breaking back to that B point. And could it be the case that that line is only worth being exposed to if it's breaking off of the 261? Because until now, arguably, that could be the case. And this general area has been known to threaten that trend with a move capable of getting it back to the 100. That's like, okay then, alright, so that is a big deal. Otherwise, if it makes an effort at coming into this 261, I just want to talk about what's here, okay? Like when we come to that 261, it undeniably will be at a point where there are B point targets. Now, funny enough, I don't think that anybody that was going for those B points is still in the trade. Like I don't think those B points are for anyone, of the recent move, because like clearly they would have to be exposed to all the way down here and still going for these particular B points up here. I mean, like, I don't think so. You know what I mean? Just something tells me not a lot of people are in that trade. So it may not get a lot of resistance when we're there. Like, not a lot of hardcore resistance. What we do have at that 261 is a channel. And I mean, we've played many 261s in the past that did not have a channel, but it just so happens that this 261 is right in the middle of an area where it was prone to going sideways. And it is very likely that we try to use those confinement areas again. Well, what if we try and put a little bit of a node on the green zone? I mean, coming back from the red is only something we've ever done today. I mean, we could pull this off. The same kind of chop on the green, push, and then dump. And it could look just like that. And yes, sure, this is probably, one of the strange ways to make an S wave. But it is true that it meets back at the equilibrium in a very similar way that we would just regularly, without all the fancy little moves in the middle. But it's one way for it to end up back in the middle. And if it chooses that here, it's only what it's been doing. So that's why it's a consideration for me. So it must be allowed. If that's the one thing that it's doing, I mean, okay, that's the last thing I'll try and prevent it from doing. If it is also clear, well, then we have to work with it, right? Because that could be how it makes its counter trend moves. It's not comfortable with making an advancement until it's made the triangle with that amount of movement out of it. Because each triangle that we've made has managed to formulate some sort of spike outside of it before being able to advance in any which way. So maybe, just like in the morning, when I was like, oh, in order to make a move of this caliber, perhaps we would need a consolidation of this caliber. you know and in order to make this kind of big move so swiftly and quickly, it has to coil up enough energy inside of a small confined tight area to be able to generate that large expansion and volatility, or that large amount of movement after the slow movement. And I'm like, well, to what this is, to this, you know this is to this. I mean, you could say that this amount of consolidation could easily provide this amount of movement. And it seems that that's proportionally accurate. This amount of consolidation could give this amount of movement. Now, be advised that it can be distorted at the open. Because is this amount of consolidation at 8:30 to 9 o'clock, or sorry, 9 o'clock to 9:30, the same as from 12 o'clock to 12:30? No. We could do this twice at 12 o'clock, because it's just a time of day where it's prone to not being able to wake up like it just opened. So yeah, maybe, this is why we didn't make it so even here. Yet it's still tried. I mean, as much as when I draw it out like that, it looks pretty even. It's like, oh, what's wrong with it? Well, a lot actually. It didn't actually make the same distance on both sides and come back to itself. It was severely cut short. This movement right here is incredibly bigger than the movement that it chose to make on the other side, although it may not seem like that. It definitely is the case. So, what's ironic about it is the consolidation seems to be enough to do this, but not to do this. Because when it did this, it did it perfectly. And when it did this, it did it perfectly. But as soon as it got back to that tip, things changed undeniably in both situations. Now, it didn't change the same way here. What it did here, it didn't go down and start to be grindy, but man, when it ever got to that tip, was that spike over and they were done. It was like the institutions shut their robots off, and then everybody else can trade. And then whatever they bought was just overlapped, suspiciously particular. It's like, unless they were part of this movement, all the people flocked in here, they get overlapped and then they continue. People, flock in here. I guess they didn't as much, or else they would have needed to be overlapped, hence the continuation. Anybody that tried this same kind of movement though, where it was like, oh yeah, You know, the triangle is going to lead into a nice continuation. Look what happened to the next triangle. Did it lead into a continuation? No, 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 no. It came back for them. Like this. That's not very nice, is it? So I'm like, that's like, okay, we don't need to learn from going through this terrible experience ourselves, but I can tell you somebody went through that experience thinking it was going to do the same thing, and effectively it came back to the tip of the triangle. One thing that's different about that triangle and this one is it is higher, undeniably. That's slow. So, you know, see, it bothers me that these are all the way over here. I'm just gonna go ahead and just move them over. Might not look so hot on the longer term picture, but I don't want to have the chart all the way zoomed out there. I can just go ahead and those same levels in there now. If we can just look a bit closer. Okay, I do notice that it's not the first time today that it's been interested in making some sort of weird attempt at a head and shoulders to inverse head and shoulders that's led into another head and shoulders. Like I'm like, what is that? At the end of the day, you know, for it to come into something else where we can see we have a left shoulder, a head, and then the right shoulder, and it fails, no inverse there. And then here, and at a very strange attempt at making a head and shoulders to an inverse, and I guess, you know, here it was a really controversial right shoulder to what could have been an inverse here. I'm very, very intrigued about that because it's clearly not doing any kind of Wyckoff or anything like that. We talked about it rising on W's earlier, and today it's almost like it's rising on failed head and shoulders. Because undeniably, the head and shoulders is a pattern that's supposed to send it down, and it doesn't seem to do that today. Well, I mean, it showed remnants of it. It was like if you look really closely at how it went down, when it went down in this trend, like the most, because it's never went down more than this point, and when it did that, it did this pattern. Isn't it ironic that every single time that it's formed that pattern ever since, it's never done this, though? Well, I mean, it's never done this at all, ever since that point. This is the closest. But it wasn't that. So I'm like, okay, interesting. It like sets everybody up for seeing, okay, the biggest pullback, the thing that everybody's going to remember, and then they show it to them again and again and again, and it doesn't seem to work. Now it's doing this weird pattern where we got like sideways, a spike on the top, and then sideways, and it ends up going higher. And I'm like, deja vu, what's going on in here? It's like a crappy version of this and this is a crappy version of that that doesn't even work. I'm like, well, that's how they've managed to construct this trend.
Yeah, all these, all of the, I've noticed that right from the beginning. Like, as soon as it started going up after that inverse, all the head and shoulders were failing,
Yeah.
pretty much.
Yep. Yeah, no, I just looked at this again even closer. Like, this is crazy to me. Like, it was like, okay, head and shoulders goes down, and then they tried to do it exactly again for the people. Like, look, okay, you guys got this now. Everybody sees the head and shoulders again, and it's like backwards. Literally went
That's what
exactly
I noticed.
backwards.
This one that you just pointed out right now,
Yeah.
that's where the 15-second hit the bottom.
Oh,
That's why.
on that low right there. So it was inherently
Yeah.
dangerous to assume that it was going to work.
Yeah.
Yeah. And what about here at 11:55? Let's take a look. 11:55, eh? Oh, it was doing it around like 11 at 7 maybe. Oh yeah, that's in there. Okay. It's one of those bottom left to top right days. I like that. Not bad.
Yeah.
I put on. Cool. Take a look at some other charts. I can't believe I haven't looked at this chart all day.
New question here. What are the different Nasdaq charts for? Now that you
Uh,
say it.
so it's honestly completely unnecessary that I do that, but sometimes they go out. There is a way that you can actually just use like different templates. I can't remember how I did it actually. Oh yeah, here. These ones. So like I can have a completely different version of this and have like different indicators and everything on it. Why is it not going? Oh, there we go. So it's still 8 cap except it's got nothing on it. Like that one.
Yeah. I think he means like, what's the difference between Oanda, 8 cap, Pepperstone?
Yeah, they're all just different providers.
Oh, okay, all right.
Yeah. And like basically like they're CFD providers. Like 8 cap's a broker, FX is a broker, Black Bull's a broker, and they all provide the Nasdaq index. And
Is FX Fidelity?
it might be actually. I'm not sure. But you can use all those brokers on here. I don't like the way that they have it all set up. Like you can trade off of here, connect like a broker. See all the
Okay,
brokers that
I
they have.
wasn't gonna do that. I was
No,
just
no,
gonna
no,
do
no.
whatever else you guys say.
Yeah, they have all these different brokers that are available with them, and you can use them. But yeah, I don't use them. I think they're great charting software. But maybe in the future they'll update it to make it more seamless and offer more bells and whistles. I mean, it's not like they're not capable. I mean, I feel like they're a really technical program, but they just want to expand on it a little bit and make it into a platform. Maybe one day they will. Who knows?
Yeah. Yeah, I'm just now really getting into it, so I'll just go with that.
Or it's like even if you didn't connect it with your trading platform to trade on, but if you could just have your trades show up on there or something, it'd be like something in the future. That'd be cool.
Oh, that'd be cool.
Yeah, if you could like toggle them on and off, because I do like if you trade a lot, it can get into the way of actually being able to look at what's going on and be able to place trend lines accurately. If you've got like arrows hovering over every single high and low, and
Oh, and those arrows would then indicate where you put your money.
yeah, exactly. Yep.
Yeah, I've seen charts like that of yours. They do. It does get hard to see sometimes.
Yeah, like in the exclusive when I post like moves like this, like those are all arrows.
Oh yeah, that I'm learning that part now.
Yep.
Telling you, come summertime.
Mhm. No rush though. Make sure that you got everything in order. That's the main thing. Just doing it right. I'm
Yes,
confident in you
exactly.
though.
Like just keep. I'm just gonna keep learning. I've like we were talking about. I actually went and looked up a couple of textbooks and things. I'm just gonna keep reading and showing up here and asking dumb questions. I know they're
Yeah.
not dumb,
No
but
worries. No, definitely not.
When you ask, that's why.
Yeah. Everybody had to ask the same question as well in order to get the understanding. Yeah, that's an interesting thing too, because it's like one thing I always say is nobody was born with the information on how to trade. Everybody has to learn it somehow. There's no shame in that. Like it's weird, like the culture you might make it seem like that, but I encourage every question you have to keep asking them if you have them.
I was the same way. I taught stats for a long time, and I had to reassure everybody. I know you went through algebra or this and that, but nobody starts with knowledge. And the biggest thing is it's all vocabulary. And so we got to get this common language down so that we can start the discussion. And I think
Hmm.
I'm still in that learning the language thing, so I'm good with it.
Yeah, yeah. No, that's fine. That's absolutely good. And I keep it pretty straightforward with the lingo. Like I don't try to use the some of the stuff that they name things is just absolutely ridiculous in my opinion. It could be named with like the like named as the thing that it is, but instead they'll put their name on it or something, and that's just like it makes it it makes it brutal for me.
Yeah,
Like an Elliott wave, like an impulse wave, it should just be a 5 wave move. And I'll just say 5 wave move now. I don't say impulse wave, because what's an impulse wave? How are you supposed to know 5 wave move is impulse wave, and why would it be named that? I mean, is there any connotation to impulse being 5? I mean, if there is, I just didn't know. Maybe I'm the one that has no idea. But how the hell are you supposed to know that if that's the case? You have to be taught it, and I'm like, why can't the name teach everything it needs to be? I'm like, that's where I
that's
come
why I
from.
have a hard time with watching too many content people on this stuff because everybody talks about it different. And they all have their own slang. So I'm gonna learn the Nasdaq this way.
Yeah. Nasdaq is. I think Pepperstone had a hiccup there. But this move can be taken back entirely. We got to watch out for that.
Yeah.
Like this spike here. So let's take a look at where the red yellow line is on NASDAQ. And does it look like we were breaking out of that line? A bit. But where did we break out to exactly? Go to the hourly. The medium bar. This could be where we consolidate. And it's like we've come back to the 161, not quite the B point. Let's mark the B point in there, why not? What about that little range that's right there? See how much problems it gave before? And it's like, is that the area that it decided to go like this? Little consolidation and come back. A little much actually, but it was even on both sides with this move. Didn't return back to itself though, but now it has, after doing another move down. Okay. Go back to the short term. Look at how close it got to that line. It's like a pixel off. Insane. What could we do at that trend? What could we do at this consolidation? Look at how much it caused problems last time. Zoomed in version of it. Oh my goodness. It ended the day there actually. That's 1600 right there. Ended the day and just did that along that level. Wow. The Europeans and the Asians will know this level big time because it's where it stayed that entire night. It's like everything that there was ever to leave that range has been bought back up to it viciously. So, and it's, you know, like they made it tough for people to be long exposed to the earnings reports, and it's like you had to come in buying right out of the gate today, pretty much. You know, well, not really, because if you did that, you would have been caught in the dip. But if you bought the dip, then you're good to go. And that's after pushing aside that buying the dip on Friday, buying the dip on Thursday, buying the dip on Wednesday didn't amount to you being able to hold it. Can you hold this one though? That's the interesting part. Because it's shown everybody that what they were doing isn't working, isn't working, isn't working. They think maybe I shouldn't do this anymore. And then it runs and hits their target. This is the human way. And I've come to understand that, you know, they try to make people in that situation. But at the end of the day, there's no better trade than finding the extreme and keeping it. At the end of the day, if you keep that extreme and make it your job to trade against it and make it safe to continue holding that, you're doing exactly what the hedge funds are doing. They can't sell it either. You know, like I say, they'll take a 30% liquidity hit. They try to liquidate their positions because everyone will see so much selling. So much so that they've even created those other exchanges to be able to secretly trade on, which again I think should be illegal, but nobody will do anything about that. They'll probably just disappear. But you know, we can work with the strategies that they use, and the market seems to move in a way that favors those that can keep the bottom and hedge against it, even on the short term. Just it's like if you can look back and see like what is the way to do it. I mean, that's the way, you know, there's no better way to do it than that. And I've looked at it and I'm like, well, why not make it an objective to trade like that then, if there's no better way to do it, right? That's the idea. Now I can't help but notice that there is a green zone and red zone here, eh? Let's talk about this. I don't want any other green zone and red zone to kind of affect us right now. The green zone and red zone I'm talking about is this one right here. And the thing is when we left that green zone at the bottom, we did it with a spike that's very similar to the one that we have right now at the red zone. Disregard there's a giant gap there. It's actually appropriate because it ran right through that area. And this is what it looks like in terms of the volume profile regardless. There's not much volume in that area. And it is still a gap anyways. And I think it's appropriate to treat it like that. Although we can see what the candlesticks look like throughout that area, it was pretty much straight up. Having a little gap there is of no issue. Notice that there's, oh, that's $1. Holy smokes, tanking. Inverse to the market, as per usual, ever since the Fed came in there to try and fix everything by pumping money into the market. Nobody thinks the money's worth anything when the market goes up now. Thinks it's artificial. So that's why we see an inverse correlation between the market and the dollar now, because when the market goes up, people assume it's the Fed pushing it, and it devalues the currency because they think they're just printing it. Now, what's funny is when the market authentically goes up, dollar still goes down because of what they did. And they thought that was a solution. So it's like, well, now their dollar can't go up with the market anymore because of that solution. And they used to have that. It will change in the future, but it seems to be the case that right now the dollar just loves moving against the market. When the market's this strong, the dollar, it's hard for it to find its own way. It just likes to move pretty much against the market, and it's pretty clear that it does that. Didn't always used to be the case though. It's like, the Canadian dollar used to actually move with oil and stuff like that. The Australian dollar used to actually move with gold and stuff like that. I mean, like, I haven't checked the Australian dollar, really the Canadian dollar, for a long time, but I think things have changed. Those correlations may still be in the textbooks, but the Nasdaq index and the other indexes are certainly a big player now in the world. And so is the dollar.
This is like that.
Sorry, what's that?
Oh, all my stuff's all glitched out. Looks weird.
Yeah, Pepperstone had a spaz there too. This is what it looks like. You can see that even on Pepperstone that didn't have a hiccup, there was a gap. I love how it just disregards this entire range right here, pretty much. Oh, I guess it did this move. Wow. Okay. Literally, it's like it comes down and it respects that level just so well. And then I mean, it's not like it didn't use a green zone in here too. Even respected the red zone a little bit while it came through it. And then to step on it like that, for it to be bought right back up to the green zone, grind it, step on the other side, step on the other side. Do the same thing with this green zone. Disregard the red altogether. A little bit of a attention for the gold bar though. Do we not notice that it came back down to test everything? But the gold bar was the one that it decided to test. I can't help but notice that yet another gold bar from the high chose to be the one that it decided to respond to. Also to come back to test the blue bar, advancing again on that, and then turning the gold bar into a support before advancing through every single B point with absolute precision. This line, it will return to this line, and any stops dragged above it are subject to getting stopped out. And I mean, it can return to that line by going sideways, which is like whatever. It could drop to it, which is also like whatever. But getting to it is inevitable as far as I can see, and it's extremely dangerous to assume otherwise. But that's okay. We're aware. And it could be cheeky about it too, like getting back to it in a weird way, like this or something. It's kind of useless, but until it returns back to it, there's a danger that it does return back to it. So it's best off we just let it return to it so that it can get away from it again. And obviously there will be a time where we will get under it. It's not safe to assume that it will stay above it for long. It can glide across it, ironically, using it as what I would call a trajectory line, which is pretty much, self-explanatory. It uses it as a trajectory to continue the trend. And I mean, we might have even used this line before. Like, look at how much it loved this angle. How much did it tetherball around that level? It's like somebody smacked it and it's spinning around, spinning around, spinning around. If you have a different perspective, and then it's like it coiled up at the top and then started to expand again, as it would, in reality. Weird. sure. We're going to keep that one as a weird line. It's going to be turned down significantly. It's an abstract line for sure. Blue, appropriate color for it. I am curious about it though, because it's like literally it was so important that we came away from it to come back to it and then test it from not only the underside but the overside again. I'm like, okay then. So on the other chart, notice that it's come back to test these lines. You know, pretty much doing that movement that we were talking about doing. The yellow line has been trying its best to hold. But notice the move back to the 260. An expectation of the day. Also keep on watch exactly the progress in regards to the filling of the gap. Also consider that this line is a 188 and this line is a 200, and we've managed to come back to it. So essentially what we did was is we came down to it, right, and hit it absolute precision, as we can see there. And then it essentially came all the way down to test it from the underside, right? I mean, like, wow, that's the audacity, right? To do that to them. All those people that accumulated on top there. And then it comes back to the mean, to the main level. This level, look at that node. It's got like no other. Could it be interested in using it? Becomes the major question. And I mean, like, you want to know how similar that is to this area. And we have a node in there too, if you didn't notice. At the end of the day, what could be the appropriate amount of time to spend at that node? Could it be anything like the last? Well, I'll tell you one thing. This is an after hours session. So the time may not be as important, but have we used it somewhere else? Because this is not an after hours session as much. Some of it is. And I'm like, is this the appropriate amount of time to get consolidations at this level? Because I'm like, damn, that looks pretty similar to the time we spent down here. And looks very similar to this movement here. We had an S wave. And I'm like, I can't help but notice like it did something very similar to begin this move as to what it did to end the other one. Like, okay, let's mark that down as an understanding. And I mean, like, okay, what about this consolidation having the S wave and this one? What is this? Could we test the blue bar again? Because after all, the blue bar has only been the talk of the town for how long now? What is the deal with this blue bar? See how much it tests it. See how it started? Is it not true that it started by lunging down and coming back to test it, and it was capable? It held for a bit. And then, you know, essentially it was continuously making it even. Remember what I was saying about a trajectory line? You know, this is on a bigger picture, like it's being used as a trajectory line for the overall trend. It is true that this red-yellow line is the trend. Until we break it, we're in a downtrend. I guess you could say that with this line too here. I'll make it red-yellow, so it stands out a bit more. So those two lines are red-yellow lines, and take that off, I guess, just so we're looking at the same thing here. Essentially, Yeah, what happens when we get the same distance and time away from the um, line that we did before? Like, are we doing that? Like, if I took this line and this one, it up, now we're not quite double yet. Is an idea. Could say that this is the area that it truly came back to the consolidation, and that could be used in the future potentially. The same kind of distance on either side, quality, very very similar. And like I only question it because it has the same kind of relationship with an area like this to what we have right in here like that. I mean, it's not exactly the same. You could say it's smaller, but it's similar in many ways. The VWAP really not given much attention. Intriguing that by the time we get to the blue bar again, the VWAP may be on the high of it. These levels can otherwise be extended as they don't disappear. As long as the market is capable of responding to them, they have a chance of being involved with the market. Now, I tell you one thing, it's becoming the case that it's getting increasingly difficult to have a relationship with this bar. To be under it is starting to become difficult, constricting. Now, another thing to consider as well with the event coming up tomorrow, what could be the objective of the institutions, other than to find a hedge to make it safe for these environments and to be positioned for the event in a way that allows assets to continue progressing in the event that it goes up, but also for hedges to profit in the event that it goes down. And if it all ends up right back where it started, a lot of money can be made either way. So it's like positioning is really important for these kind of events. And if you've already got one direction locked down, that's huge. Like if you've got your stop and profit on one direction for the event, it's either some money or more money. The farther away your position, the better, no? The harder it is for it to come back for you. And the more likely that it's going to be that you don't have to take a risk come close to the report. If it allows you to remain in from a far away position, there's no better way to be positioned, a safe distance away, and hedged while the report comes out. So that's a worthy ideal, I guess you could say. Now I can't help but tell you that we've come back to test the 188-200 from above. If we go ahead and look at, let's see, I think it's on this chart too, maybe 60 minute, yeah. So that 188 right now, right? We've come back off the medium bar to test the 188 from above, and that's where we're at with this right now. Uh, Testing these levels, got two of them. So when we spiked out of the range originally, it managed to come down to hit the 188, and when it did, it bounced back into the range on the short term. It is somewhat likely that the spike out of the bottom of the range, just as we've had it now, can amount to a spike on the other side of the range and an entrance to the bar. Because one thing that's interesting about this is only so much consolidation can be had inside of this area until we're forced to make it into the gold bar. And the more consolidation that we have here, the more likely that we're going to actually be able to generate a move like this on the other side. And that's something that's quite intriguing. Now, of course, any movement that there is outside of the medium bar is subject to coming back to it. So in the event that we do this movement and it looks like this point here that we're currently at could be the middle of this sequence before trying to continue again. In the event that it does that, we're right here in the middle of this move. And in the event that it makes a second wave that could move into a third, there is a chance that we might not get a strong retracement to this medium area. Like I think about this and I'm like, well, if we chop here, right? And if we blow through the top and if we get to this VWAP by the time that we do that, we could actually hit this level and continue again on a fourth and the fifth wave. Just like we did here. Like this was violent though. Like look at this. It was like wow, smash and then smash again. And it's like, well, that's just the second wave. And it was like really a very difficult second wave in a series of real 5 waves. These were intense, sure, but at the end of the day, they were a second wave to a series of something that managed to make more than 5 waves. But beyond the fifth wave, there was 1, 2, and 3 consecutive highs, an ending diagonal, something we're familiar with, and something that happened in reverse as well. More than 5 waves, I can see. So making a chop under here, like it's appropriate for it to try and get back into this range and chop there, so we shall see. Look at the 1 minute. Like I said, the entire move that we had there is subject to being taken back, and you can see that where it was taken back to was particularly the white dashed line. We can see that this movement that we had out of the bottom, which was, I would say, it was moving differently in that area than it was moving here, and then what it was moving here. And I would say that area could even extend up to this point right here. And what it did in this area right here was far different, but similar to what we did in here. And the only other movement that I've ever seen that's like this is here. Like it did a double. Not really the same as what we... But if it is so interested in making it from one side to the next of one bar, we could only consider what it did on the other side of the first bar. And you know what it did? What did it do? I mean, it didn't do that. It did this. So what would this look like? A move back to where it began. And I can only think about this because what do you want the end of the day to look like? The middle to the end of the day be very centralized. It's a possibility that we try to at least cross over the blue bar by the end of the day. So any stops dragged in its path of doing that are subject to getting stopped out. Like the POC itself, like of this move from here where we currently are all the way to here, it undeniably will be testing the POC if it hits the blue bar by at any time in that area. So at any time in that area, if it chooses to return back to the POC, which I'm like, all right, well, hold on. How big of a move would that be? And have we done that move before? Is it a good question? Take a look. Is it exactly this move? Is it close enough? Because that's interesting to me. I find it very, very, very intriguing how similar required move would be to make that happen. And it just so happens to be the move it was comfortable making away from the POC before too. And how much of that move was spike? How much of that move was consolidation? Well, we can see this move here, it started with this much consolidation, roughly like, and then this move right here was the spiky bit. And it's a component. Remember, you can love it or hate it by calling it the spiky bit, but is it not the same as what we had on the high? What we can have on the bottom? Related to the consolidation we can see happen before it. And I'm like, well, what about the how come it's so similar then? Is it just a fourth wave? Becomes the next question. Because undeniably, if we make this move and this move, are they not two counter trend moves of similar size separated by what could be this move right here at the end? I mean, it might be a bit much, but it's an idea. I would find it, you know, it must be a consideration. It's like, okay, we considered this. While we're doing everything that we're doing in here, we have to explain ourselves if we're obstructing its ability to be able to do that. Now, I'll tell you one thing. There will be many trend breaks until that point. Of course, there's a lot of time there. Wow, but is it going to do one pattern until then? No, it's probably going to do a few. So we're going to have to be aware of them and see what happens. Can some patterns fail? Do they fail so much that they mean change? You know, it's an interesting one. Where have we seen this trend before? Becomes the question. And is it trying to do phase A? So, like that's those are all the considerations that I'm thinking of in this environment, and I'm sure I could continue finding them, but like the considerations that I do find right now, they don't progress me towards wanting to do something with this area. It gives me an understanding that until this completes, I'm going to continue compiling information.
Can we see that Wyckoff chart?
Oh yeah,
Where
100%.
at the little notch on the first move. I think I see that right.
Exactly. Yep. Look at that right now. Yeah, so like, I find this notch important because like it was the stepping stone to like the the run up that we had that conquered this blue bar basically. It was like that was the support building time frame where they were like, trying to like basically pull themselves onto the ledge here where it was a struggle and then it lifted off from it, came back to it. And I mean that's kind of like where we're at with it right now.
I wonder if we're just forming a shoulder here, John, for this head and shoulders.
It totally could. It totally could. And I mean, maybe we're going into it too much because at the end of the day, in order to get through this sequence right here, it actually does form what can look like a head and shoulders at this point. But then it fails though miserably. It goes up. But forming it is definitely like the controversial thing. And I'm like, I can't wait to see if they're gonna make it fail or not. Because if they make it work, then we're closer to it being able to do something like this, which is an interesting pattern because if it does that, it's a downtrend that could otherwise double up. And I mean, that could start from a head and shoulders, like this movement right here. And we've seen that so many times.
Legatus. Hello, Mr. Legatus.
Hey, how's it going?
Wow, amazing. Thank you so much for the content you provide. I'm because of Solomon here, and wow, it's amazing. I'm sorry that I'm so late to class, and yeah, thank you so much. Thank you so much
Hey,
that I
welcome.
can be on the journey.
Yeah, for sure. I appreciate it. Thank you so much. Yeah, that's awesome. Yeah, welcome. Definitely. If you have
I
any
just
questions, let me know.
I just gotta be honest, like it's like I'm just like starting. I just did one session with Solomon on the weekend, and it's so much. So how do you know when you buy and or is it later on I have to know? Right now it's not important.
Yeah, I'd say so. Like getting an understanding of everything. So like the one of my major things is I say like it has to be very very clear before you take action. Like you want to make sure that you're really understanding everything so much so that it's like oh my goodness I know where I can fit into this so well because I see it so clearly that I understand it and what part of the sequence it's in. I'm so familiar with that I can actually be part of it and like right now, like I'm actually not interested so much in this little area, but I can like what I can explain why is because this is an area where really it just goes sideways. Like this is kind of crappy when it does this ultimately. But to understand that it has little parts and sequences, and yeah, we can take parts of it, but they're a little bit risky because they're not huge moves, and they can kind of fade out into like really slow crappy environments so I basically I'm watching the progress of this here. Some places it can be very clear that it wants to do a certain part of the sequence, and we'll find some clarity in that. But right now it's kind of between two patterns, and once it makes one of the two patterns then we could potentially find value in it. But we're just waiting right now. And each day like the low is made differently, so it's not a matter of like finding the same kind of strategy and implementing it the same way, but rather how the market changes, and we have to be part of those changes as well and adapt to them. And it involves trading differently, but not too differently. It's just basically small changes towards the sequence that I go through. And like I have like a sequence where basically we consider how to manage the trade, exactly where to begin, how many contracts to take, and exactly what to do with those contracts, how to break it down. Like what I have is I call it the three trade trifecta, and honestly, this is just one like way to do it. Like I definitely have built on this as well, but the way that I, for instance, say to position yourself is there's three contracts, so three different trades that you'll make that basically build your position to a full size position. And the first one, it involves you understanding how a trend breaks. So like the first thing that we do to get to a trend break is actually get close to it, and that's one thing that we have to do. So if there's a lot of space between the current time and how much it can trade to get to that trend line, we have to consider that. But when we do, the trend line breaks, and then it breaks with what I call an ignition candle. And that's like the movement when it's like a shock when it breaks the trend, and it makes a move, and usually it runs into the first barrier, and it might look something just like this even on the volume profile, and it literally can run right up into it. And uh, and then start to do what's called the retest. And on the retest, it's intended to hold that trend and test it from the other side before getting into the continuation phase, and then actually going into the new trend and being part of like a new trend altogether. And that can be that can be understood. So in order to basically do this, you want to get exposure beneath the trend break and basically allow yourself to be in before the yellow line breaks. So when it does and it makes this ignition candle, you can sell your first contract off. And and basically that first ignition candle contract secures your profit, so that in the event that it falls right back down, you've taken some profit, and that allows your stop to absorb some of the blow if it does come down and stop you out, and you've already taken some off. But then you've got something for your price target, so where you actually think it's going to go, like a green dash line, or some sort of price target, and you have something to sell there, and then something to carry on for exposure for beyond your price target, so that you can have even more if it decides to like break right through like this B point right here. I could imagine it's a target for some short-term traders, but we broke the trend to get to it, and in the event that it gets through it, then you'll have something for even farther beyond. And that just allows you to have some flexibility to piece out your position. And things like that I think are really important to having down as systems, to make sure that you're aware of them every single time that you make the trade. so that you're not like fumbling around with how much you need to buy and exactly what you want to do with each contract. It kind of has a purpose, and each time, you might see that you can be a little bit more flexible with it. For instance, in the event that you have a reason to believe that it will come down off of your price target, you could you have the option to take more off there if you wanted to, or drag your stop up, or there's just different things that you can do there. In this case, we're pretty sideways in terms of movement. Could be in this phase right here.
Yeah, Mr. Legatus, it's like so much, and I understand a little bit if you say it, it
Hmm.
makes sense, I feel like.
Yeah,
But then it doesn't make sense if I would be alone in a room and do it by myself. You know what I mean? It's so much, it's crazy. But
yeah,
I love it, love it. I love the journey. Thank you so much that you do it for free. I don't know. Damn,
yeah.
that's amazing.
Yeah, well, I do have a membership here to unlock more content and so on. But I'll message you the details on that and so on. I also make videos and stuff too. So like I have over maybe I have 60 hours of videos where I have like I have like everything from subtitles on there to like explaining like that I've written in to like show as I'm talking about it as well in a visual way. Because it is a bit much, like you said, right? So you might want to be able to pause it and like go over it and stuff like that as well. So that's like another major thing. I do want to make more videos here soon as well.
Okay, and oh, they are on the YouTube channel. Yeah, Solomon sent me, I think.
Yeah,
And
yeah.
all I wanted to ask, do you think like I'm just an average Joe, I would say, I'm not
Mhm,
the
mhm.
smart in class, and I don't know if I have to be like super intelligent to trade, or can I study it without being the
No,
most
no.
smartest in
Yeah,
class?
no, no, you definitely don't. Like it like I literally failed so much in school, man. Like I was really not like a straight A student or anything like that. And math and stuff, like I was really bad at. But when I break this down, like it's really just shapes and stuff. Like it's really, we look at like not numbers, but we still do things like distances and angles and stuff like that. It's not as much the scary stuff that I was really bad at, like in school and so on. And I think that it's a matter of it's difficult in certain ways, like you need discipline and patience and those things. It's difficult, but as a matter of understanding like the patterns, you have to be able to remember, I would say, like maybe 30 concepts, 30 different shapes, 30 different meanings, 30 potential different outcomes. And it takes time to get those things down and variants of them. But overall, the it doesn't take a lot of like actual calculations or anything like that, or any advanced math or anything that anybody's not really capable of doing. I think it's pretty straightforward. It just takes the things like discipline and so on that people struggle with, actually. And the emotional side of it can be too much for some people, like watching, like if you catch the best price, sometimes in order to keep that best price, it might involve holding through a pullback that could be really uncomfortable. But this price is always better than this one. And that's the funny part. And in order to end up keeping the best price, sometimes it involves like having pullbacks, and sometimes people crumble under the pullback. So it's very tough on the mind, right? So you got to be careful about that. And it's like it's definitely put everybody like through some sort of uncomfortable emotional environment. And I mean, sometimes that's too much for some people. And it's like, in my opinion, you can find systems that can help you become less emotional and more I guess like under control, so that you don't have to be so emotional. Like I find systems for being able to control how I'm positioned in the market so that I don't have to be emotional. So like, for instance, when I say the three trade trifecta earlier, like if you were to take three contracts and you took like one of them off and then another one off, if you keep your stop loss higher than your last contract, there's not really any way that you can lose money, because if it hits you out, then you're gonna get stopped out, even if it's worth like $20 or something like that. It might not be worth the same like $120 that it was up here or something, but it could be worth something, and at least it's not a loss. And what you sold off here for, I mean, $25 and $50 or something, you get to keep forever. And this last contract has that potential to continue running. And it's like, that's one way that you can really think to yourself. It's like, why would you be emotional about that when you're either going to make money or more money? So it's like setting a situation up like that is really important, um, to me, so that it's not a worry. Because I often say that we only worry because we don't know what's going to happen to us. But if we're absolutely clear with the risk and reward, then it's really clear how we can position ourselves and be safe. So yeah.
Yeah, I think you pointed something out there that I'm just learning. I'm new like you, Thomas. Is that it's not so much when to buy, but it's how to buy, and that's taking a lot of time because, like you, I like to learn, and I might make fun of my own intelligence, but the fact that I'm here and doing it and trying to learn is a whole like telling thing, and I'm just gonna stick with it and see how I do. But I'm not gonna put money in it till I'm comfortable with the tools
Yep.
and all of that, and comfortable with the logic and the lingo, and
Mhm.
then I'll make my move.
No, definitely. I don't jump into the market and I don't know anything. Of course not. But I just was wondering, like, because Solomon showed me like how to set up trends. I just did one session, like four, yeah, 3 or 4 hours with him, and so I know it's just a tiny, tiny, tiny little bit. You know, I
Mhm.
don't
Mhm.
know old patterns. So of course I'm not putting money in. I just was wondering. So
Mhm.
how do I see now a pattern where I can put money in? Because I can analyze the way it did, but I can't really analyze. I feel like how it will now turn out. So it could always go down. It's crazy. It's crazy.
Yeah, yeah. And the more you understand, the more patterns you learn, like the more comfortable you'll be. Like I often say, if you learn one pattern, then you're good to go when that pattern shows up, if you know everything about it and you're comfortable with that pattern. But if you learn, like 5 patterns, you'll see more things more regularly, because you won't just be waiting for that one pattern. But it all starts with, it's like everybody started with their first pattern at some point, right? So it's not a bad thing. It's a good thing to build up as many as you can, and understand as much as you can, so that when you open the chart, it's like, oh, I see this, it's doing this. And it's like, because you're already familiar with it, and maybe it's halfway done, but then it starts making something else you're familiar with. And if not, then it's like, what is this doing? And how do I understand this, and that's what I can help you with, is whenever it is doing something that's part of a pattern, I'm definitely just making it clear the way that I see it, and uh and understanding that.
You're really kind in putting other things up that other people suggest too, because it kind of helps me see my chart that I'm working with and your.
Mhm.
Yeah, and if I may can say it, um, if you allow, I always looked like, hey, trading, it could be interesting. But
Mhm.
there was nobody ever who wanted to really show it. Like on YouTube, of course, they have one video, two videos.
Mhm.
But so this is like amazing. I feel like I found like a diamond mine.
I'm
Nice.
Maybe
glad
no,
you're here.
Yeah,
not
welcome.
because of money, because of money, but because I can finally now ask anything I want, and I don't have to Google it, and there are no more
Exactly.
questions. So
Yeah.
I feel like blessed. Not if I don't want to make money. Like of course one day, but it's not the thing that I say that's diamond. I say because
the
of
understanding.
that you are here. Thank you so much.
Yeah, man. Anytime. Yeah, for sure. Happy to have you. Yeah.
Broke out of this little downtrend here, yeah. Are we gonna try and look at what's going on?
Yeah. So the downtrend is the last thing that we really did. It wasn't really much of a exciting thing, but it brought us into the Wyckoff. Let me find that. I'll
Yeah.
I'll pull it up again here.
Came off at 261, John, and hit the B point, and then started going back up.
From the small one, eh? Or this one up here, yeah.
Yeah, there was a B point at 1218,
Okay.
and that's what I went off of, and it came off at 261.
Okay, and
And
came
so
right
where
back
it
to that one.
started to, double bottom sort of thing, and then went back up.
Yeah, I could tell with this movement right here that it really wanted to be a spike too. Like its consistency from this movement really changed, and it was trying to grasp on to some sort of, ability to buy more time with the overall trend. But then this blue line really formed, and it's I think that's
I
that's
did
the
that
problem.
same thing.
Yeah. Yeah, that could come out of the other side. I thought about this. I'm like, well, if we make this a circle here and or this whole movement, it could have a spike similar to the one that we had at the top. It's an idea. The value of breaking the support line. I do think that this is the one of the more important support lines right now as well. We do have time with it though. Like it could spend time grinding. But undeniably, when it breaks it this time, people will be considering the potential for it to be an M. And I can't help but think, is it anything similar to W that we made on the opposite side of the spectrum? And not really. I mean, what what W would it be matched to? This one down here? That's a giant W. And I mean, we never got back to that point right there.
Mr. Solomon, Mr. Legatus, while you are analyzing it, are you already having positions to it, or you
Yep.
just doing to analyze? Wow. Okay.
Yep. So I keep positions. Like sometimes I trade a little bit more frequently than others. Like right now, I'm not interested in trading this range right now. But I'm more interested in seeing if it wants to do more than this. Cause okay, I'll show you what I'm looking at right now. Like this environment right here is kind of like this PSY, and it just did this N right here, and it's doing the N right here. And it could I want to know if it wants to come down and finish the the sequence here because it's definitely
Wow, I see it. Wow.
mhm. Whoops, like that. Because the thing is I've come to recognize this wave right here, this phase, it happens like very, very particularly. And phase A, I've come to call it accurate, and phase B is the largest phase, and it ultimately comes into a triangle, and it's quite boring or brutal. So I call it that, and it's sometimes there's the most area for failure. Like it's brutal because it might not even happen because it might just be interested in doing phase A because phase A is pretty accurate. Like I mean, it's hit the nail on the head with every single move from the uh, the PSY here and the BC and then the AR and then ST and then this one. It's like maybe. So I'm like, all right, let's see. If it's a maybe, it's never good enough for me. I don't like to trade on maybes. It has to be a certainty, like a something I'm very confident in. And in this case, it could just continue going higher. I mean, one thing that we've done today is like we've done this sequence before, and then just finished it like that. Like done it here, and then done this part, and it's like, oh, are we gonna do that? And then it just goes boom, and then it goes up again. I'm like, well, if it managed to do phase A accurately, and then the rest of it is no good. And then even here too, I was like phase A could be like in there, and then it does the N and goes into phase B, but maybe starts and then fails. It goes up hard. I mean, like it's already done this a lot today, so it's getting closer to being able to do this than ever before. But what's funny about it is I think that it'll actually go through this series and get to a point like this and not go down. which is ironic because sometimes we get into an environment where the long term suggests that we're somewhere right in the middle of everything, like in this chart on the hourly. We're right in the middle of everything, and it's not really high at all. It's not a really good place to have a bearish pattern. Like it's an area that we take a fib set from the very high to the very low. We can oh, we can see that out of the entire dump that it made from the high to low, it only has come up 38% of the way. So I mean, when it makes it to this 50, it's went half. It's come back half of the way, and it's not even half yet. So we talk about it being high. It's not even halfway into the last move yet. It can't be high. So I'm like, an effective pattern to send it down, you would think would happen from a point that's effectively high. And in this case, if we do a chop here and it looks like a Wyckoff, it could end up going like a 5-wave move, kind of like what we did here. I'm wondering about that uh, happening here, and it would fool everyone because making a short-term pattern on the on this time frame that tells us it's going to go down would actually fail and end up going up. There's been a lot of that lately, and it's kind of like picking the traps. And in this chart, I had a an idea that this level right here, it wasn't going to hold us down, but what we were going to do is come back to test it from the other side, because it's controversial, because past few days they've showed us that this level can actually send it down right off of it, right? And it'll come down and just basically it'll smash it and then come down. And this time it didn't do that. It like jumped past it and then came back for them. So anybody that tried to short it got kind of screwed over. And that's what I expected to happen there. It's kind of a brutal move. But in the sequence, it managed to grab some targets that were never otherwise hit. Left them open over here.
Coming off of 188, 200 to that B point W just down below. At around 1320.
Let's see, 1320.
Yeah, that's where the B point is.
Right there, yeah.
Yeah. Yeah, I'm trying to switch over to like sell market now, and instead of selling ask, because I'm not getting because when I try to get a spike on the top, it'll get me for one, and it won't get me for two or whatever. So
Mhm.
I was gonna like I missed out on I don't know how many points now because of that. So I'm just gonna sell the market next time I see these things when they're so friggin' obvious.
Yeah, if it's at an obvious point and you want to get some exposure, if the bid is drying up and you know you're not going to be able to get in,
Yeah.
then that's fine.
Why? What do you normally do for sells? Do you do sell the bid
Um, well, it depends
or are
on
you still
whether
selling the ask?
like it depends on whether or not I think if there's going to be an area where it's like, oh, it potentially can have wicks and spikes, then I think about it like, oh, I want to be able to lower my average a little bit by trying to grab those wicks and spikes. But if I think it's going to be an absolute precision test of a level and it's coming down to hit like a 200 or something like that, and I want to be in exactly on that level and it's stretching to it and the bid and ask is already kind of thin because it's overstretching itself to this barrier that otherwise shouldn't get much wicks and spikes past it. Those are really like, oh my goodness, you can't be trying to get the bid or the ask there because it's like it's obviously not even going to spike past it a bit. But then you get levels where it's like, it's moving so much past the level where it's like, all right, I want to be able to grab some, and I know it's going to be wicks and spikes. Uh, like say that there's a 261 like right here, and you know it's come past it. There's not going to be much volume up in there. Like look at how much volume there is there. So it's like that's not a good time for bid and ask really, but it's the best time to trade. You want to be in from there.
Exactly.
Yeah.
Yeah.
But if you're,
It happens to me almost every day, so I gotta switch it around because I'm always into the spikes, right? I'm usually not getting into anything unless it is a spike.
yep, yep.
A major fib, yada yada. There's not much volume there, and
Mhm.
it's just sucks when you see it go down. I don't know how many points, and you're not in on it, or you only got one, right?
Mm.
So yeah,
Yeah.
we're just a big triangle right now, too, right?
Yep. That's really important to understand that too. I do like that. Really, I do like that because when we look at this Wyckoff, it does make that triangle as well. Um, like this area right here, it could be very much viewed as an area that like it tries to come down out of the triangle, and it tries to come up out of the triangle, and ultimately everything just triangulates again right at that tip in the future. Phase B can be quite boring, as I say. It's something that really invites the consolidations to continue being tighter and uh, losing volatility, but it means that we're losing the amount of profit that each move is willing to offer into basically, a standstill. When it starts to do things like this, it's probably one of the most dangerous environments to take a position in because you're really gambling on which way it's going to leave, and it's like it can't be just because it's doing this that you're entering. It's like sometimes there can be this can be positioned in a place where it's attractive, but this itself is typically not a really nice place to enter. But now we do have a triangulation. So what could be the value of leaving the triangle? Could it be to come back to it? What's the deal with the gold bar? That's been quite predominantly. Oh yeah, and this movement right here, it reminds me that until literally the change of the next hour, it it would be associated with the POC if it got back to that blue line. And the blue line is truly where this blue bar begins. Okay, sorted. So now we can see we're returning back to the triangle, but I can't help but notice the spike that we made originally out of the top and how much that is. It's like it doubled the entire range from before, almost like this entire movement was doubled to get to that point. And I can't help but think, what if we double it again, the downside, And it doesn't actually have to go down to get to it, which is ironic because it did before. To get to this line, it could go sideways. But what's interesting about that line is when we get to it, it inevitably has spent the same amount of space away, regardless of when we get to it. So even if we got to it from up here, it can inflict change heavily. What it could mean is that the movements that we have from that point on may not be interested in coming back to the original consolidation bar. Because I'll tell you one thing, that thing is steep, and you can see that, whoops, it was interested in actually using one side to the next, like it was a range almost. And so much so that it was really even good at it. Like it managed to do this very well. Like, do you see how it even stayed within the same kind of movement? Like it went from one red circle to the next. I just duplicated that over. It did the same freaking move. Again, took the same time. I mean, it was a little different in the middle and such, sure, but let's take note of that as well. Is it not true that it was a cap wave? One, two, three, four, and five. Like I call this a cap wave because it's like a capacitor. It has a small third wave, and essentially that's the difference between like your typical 5-wave move. This here is typically not uh, as frequent as this one, but it still is the same 5 moves required to make the other one. And I'm like, this move here, I totally see that, like right here. It did it fine. Nothing wrong with it. But then it does stuff like this and just ruins it. I'm like, well, okay, fine. So you have to be prepared. It's clearly capable of doing both of them. So, well, and this one is a very strange one here too. You can see it almost like it came up as a cap wave here. Very much like a different version of this. And if it is so common, well, it can become more possible. That's the idea. And the first step is awareness in it. If it has any components, like, okay, for instance, you know, this strange movement that we have, 1, 2, 3, 4, and 5. I'm gonna complete this drawing right here. What's the difference between this? That. Could it be part of it? Because I mean, is it not true that this is happening here? Like I mean, inevitably we do have a spike and then a consolidation and then another spike here. And it did that, but it was part of this at the same time. So it's like, okay, they can be interconnected. And while it's busy doing something that looks like this, every now and again it fits in a way to be able to do it properly. It's almost like right before it managed to pull this one off, which is really weird. It managed to do one properly. Like that was pretty on point with exactly how it should be. This is the incorrect version. The incorrect version came after the good one. 2 times now. So that's just okay. If we see it a third time, it's like, well, now we know what to expect. We should start looking for that and see if it changes. It's not necessarily something that you want to trade to make money on, but you don't want to obstruct it from making this so common move. And until it becomes so obvious that it's making it so regularly, it's unsafe, truly, to take. Hedging it, it's a little bit easier, a little bit safer because you're actually reducing risk of continuing to hold. Just taking it as a singular trade can be a little bit riskier until it's made itself clear that that is exactly what it wants to be regularly. But I do have deja vu here with this movement that we have right here, testing this point from the underside. Where do we see that before? So basically, what we had is a run up with a 5-wave move. We've dumped beneath these levels just to test from the underside. That's absolutely fine. Um, yeah, like I know it's not exactly the same, but we did do something like it in here, where there was lows and we came back up to test them all from the underside, um, in a little bit of a different way. But what it did is it made low, low, and then it came back to get them. And that's what it was doing here, is making lows, and then it came back to get them. So at what sequence were we in when we were doing this? Well, I can tell you as a matter of fact that we were pulling back this much. Are we pulling back this much now? You know, it's like we could be. And if we are we just in a counter trend move? Comes the next question. Why is it so similar? You know, so similar. I'm like, I didn't intend for it to be so similar, but if you check so regularly, I mean, you start to think, well, maybe I should check. You know, maybe it's going to be similar again, you know. And I'm like, yeah, it sure is. Very similar. And I mean, that just means that in this trend, there's a certain way that we like to pull back. And that's one of the ways that we pull back. It's just doing this move again. We've already done it before. And since we did it before, all it did was readjust the trend. And could that be its purpose now? Because I mean, that's so steep, right? It's like how much can we hold that? We can't. But this line still couldn't hold it either, but it created a severe trajectory line. I mean, is that going to be the result of this one too? I can't help but notice that it's trying to do the next phase in the Wyckoff. We've got the N finally completing with the ability to go down into this SOW in phase B, and it tried. And now I would say that after we've done the N and it's come down, now we're about here. And it's terrible, I can't trace over it, but we're about here, I would think. You know, after the N, we came down into phase B, we did that, and we came up and we're there. It's like this is an area where across the board here, you know, it's tip of the triangle, you know, and that triangle might be found over here too, right? That earlier.
So that graph suggests that it's going to wiggle up and down a little bit before it gets up to the top, right?
Yeah, I mean, this graph even suggests that we could even make another triangle like this one, or maybe like
Often that happens.
yeah, it could go from this one to the next one, and technically it continues to hold that same angle on that one too, almost like it tries 3 times. But it's controversial because the third one it might not try. Uh, Third one it could be like this, and it's like, oh well, maybe it doesn't do this high. The only thing that changes. And I'm like, well, I'm not going to complain if it decides to come up out of the range as well and not stop to come back down. Because one thing that I've recognized with this area is phase B, it is probably because phase A is so singular. Phase B is probably the one phase that actually gets the most failure because it doesn't get a chance to fail at any other phase. So phase B is definitely something that it's tough to make it through because it's such a large phase and it involves such terrible movement that if the market wants to move, that's a large portion out of the day that it spends just chopping around. And
Right.
sometimes it doesn't like to do that. So it's most prone to failure, especially prior to the most controversial phase. It's like, well, of course, the next one is the one that may or may not happen. And I'm like, well, there's nothing in the previous phases that insinuate that this should be the case for phase C, or that
Yeah, we may run out of time in the day to get to phase C.
yeah, that's another major factor. Let's take a look at where the imbalance looks like here on from a visual perspective. So I like to mark this point of the day here as a very important period where a report can be released and we can see an increase in volatility as that report is released. But it's important to understand that most trades that are taken at a time like this are going to somewhat have exposure to a period like that. And I mean, right now, I think we're starting to establish like a little bit of a VWAP in here. See, I like to place the VWAP at the preliminary support. It seems like it's unfair, you know, not placing it into the middle. But is it not true that this is the first point of the consolidation that's considered in the schematic? And when placing it here, I've found that, you know, it is where this consolidation begins, and it does remarkably work its way around it to make it look uh, very similar. Now, I must say as well that putting it into the middle doesn't really change too much, as you can see. But in the future, it can, depending on the size of the consolidation as well. Like if this was the daily, it could really matter because the 1 minute chart, the two lines will be so far apart. It'll be like the entire day high and low. So the end of the day, it's true that this line right here, if it allows me to this one up, it's the elephant in the room right now because it's the support to the entire channel that we have there, and what that channel's been good at doing is doubling, and doubling would mean get to this level. So that level, I'm like, I find it nearly impossible for us not to get to that level at some point because the price is working in favor of coming up. Do you know we have to exert energy to go higher in order to get away from that line? Because if we go sideways, I mean the line is coming to us. So that means that it's hard for it's not necessarily good to try and position yourself with that line. Like a lot of people are like, "Oh, trend is your friend" and stuff. I'm like, the next trend when this line breaks is going to offer more than what this trend has left in it. So I'm like, I like to look at the trend is your friend if you're in from before it begins. There you go, that rhymes. So that's pretty much the way that it has to be. If you're in from the old trend, then you can be in for the entirety of the new one. And I mean, I like that. I don't like to get in halfway through the move at all or anything like that. And what's crazy is some days where it doesn't offer frequent extremes or it doesn't offer the best price frequently. It's it's a lot less frequent that it provides really high probability trades because anything that's laid into the move has been made clear that they like to overlap the people that are laid into the move. And if you've ever found yourself laid into the move, you might be in for a lot of the the run and such, but it just means that at any given time, it could make a retracement that comes back to get you because you're above the 61 or because you're above the 78. And I'm like, above the 78, that means you have to be in nearly from the bottom if you're going to be below the 78 every single time, be able to withstand a pullback to the 78. And I mean, it's tough on the mind if you haven't got a hedge for that kind of a move. So it's like you start to build a habit out of hedging a little bit more when you recognize that it's actually unsafe to not have the hedge and it's unsafe to trade against the move unless you're hedging. And I'm like, well, you know, what do you think? The rules are at at the best hedge fund. They're probably you have to be hedging and building up assets so that then you can take short-term trades against them and protect yourself within limits. Never taking more than half of your core really puts a safety net on your ability to try and catch the highs. And even if you're wrong, you're still just making a little bit less on your core. You're not actually losing a whole lot of money. You're just making less than you otherwise would if you didn't hedge. But in the event that the hedge is profitable, then you start to build up an even stronger stop on your core. That in the event that you've hedged it so much that you've made up more profit than you have in your core, that could be the case if you take a core position and then it comes up and you hedge it and you get another hedge and you get another hedge and you get another hedge. This move right here, having taken that move down, that move down, that move down, and that move down, even if you use half the position size, you know, you'll be profitable um, more so than what you have on your core. And in the event that your core gets overlapped, you're still left with a high. So it means that every moment that you are hedged, you do not have to worry as much about this coming back because you're actually going to turn that move into a profit. And God forbid it wants to make this the new core, because if it does, then you can hedge it and develop an even stronger position than you originally had because it's a hedge. Because if you have three from the top, buying three at the bottom won't mean that you really have a position, because any money that you make, you will lose on this. You may have to accumulate more. Now, if you only started with three here, you may have to get four in order to actually affect this position size. So you can justify getting more and from a farther away spot. It's like, ironically, that seems to be would benefit the people of this situation the most? To have went long, to hedged it, to hedge the hedge, and then rally. Kind of literally just what I explained in the schematic that I drew out. But it's not exactly necessary, but it is, what is necessary is to make sure that you retain exposure. And even if the people recognized it was going to go up from here, they had to either rebuy it or experience it come back over 100% of the move, which is tough, or, a lot of people, I wouldn't suspect that they were even part of that movement because what time was it? I mean, look at it. It was 5 in the morning. I'm like, good luck with that. So it's you expect to be like awake at the open. I mean, what time do you go to bed if you're awake at 5? I mean, that's hardcore, especially because you know sitting through really choppy movements from 5 to 9. But phase B is boring, and it is pretty. It's showing its ability to do that for us. It looks like we're managing to attempt a spike similar size to the one that we've had on the top of the range, potentially capable of getting us to the green, exactly as it did before on the other side. Notice the change in volume. The relationship with the gold bar could be seen as important. Be surprised if we had a spike that matched it too. I'm seeing a couple here actually. So I'm like, I don't know if I want to look at that as much as I want to look at this versus its capability to stay within that range. Now what's weird about that is it might stretch back just like it did before. So it's stretching back all right. Right from the peak. And I'm like, we kind of tested the triangle as we left it, but it's not good enough, I don't think. And it's like, what about the POC? What about the old POC? I thought there used to be a big one here. That's nothing actually. Let's take a look at it. Just this. That used to be the POC, but I'm like, well, hold on a second. Not anymore. See it snapping back exactly like it did here. Very, very similar. And it's like, what that does is it's like another point for absolute control of the situation with the gold line. Like two precision spikes that just so happen to be like so relatable. Such a strange way. Oh, hold on a second. This movement right here came right before this one, right? And it did here too, in a different way. And of course we have a new trend line. New yellow. Interesting that it came down to hit the blue, or sorry, the green here. In 1 minute. Last time it did that, it was here. Interesting too because I can see like on the 15-second it hit here, but on the 30-second it didn't. And 30-second it just had this one, had this one. Yeah, not the two. And this channel that we used to have, like it's increasingly similar to the distance that I think we're. Like they got it from here.
It's kind of weird. Nasdaq's the only one feeling this big bump today.
Well, it's Microsoft and Google earnings tomorrow. Let's take a look at them.
Yeah.
It's remarkably the same confinement area as we had in the last channel. You see, it's just a tad smaller.
Aren't Microsoft and Google on the US 500 too?
They might be, but they're a lot more diluted because of the other stocks as well. And it's like Coca-Cola might be going down. Yeah, it's like their earnings are tomorrow as well. That's kind of like burning a hole in their ability to do anything. But I mean, hardly. They're up still. It's just not up like what we're up.
It's kind of crazy. They're just a big sugar company.
Well, they're a company that owns other companies.
Yeah.
That's
Coca-Cola. Yeah.
yeah. Aren't they like Pepsi in the
Oh,
sense?
yeah. But they all have brands. But I mean, they're just basically selling either just pure water or sugar.
Hmm. I can see Coca-Cola setting up for spike on the top, consolidation, spike on the bottom. It's a terrible. They've always moved really bad, in my opinion. I've never been attracted to them, and I could never find out why everybody was, because this is terrible move. It reminds me of Ford, another company I've always just like wanted to move well, but they've never moved well. They're just really bad. They've been the same price since I've ever seen them.
That's how I feel about AMD. I mean, not recently, but they were for a long time.
Oh wow. Say the spike on the bottom of this long-term consolidation, even spike out of both sides just to return back to this area. It's terrible. But AMD, they've been a little bit, they've woken up a little bit in their ability
Yeah,
to trade.
that's absolutely true.
Yeah, they move pretty well. But like they used to move pretty crappy. Like they have off days where they're just like this. They just don't really move well at all. Like this is the beginning and this is the end of whatever day this was, Monday. So now it becomes the case where I am interestingly or intriguingly going to place that line there as well. This line becomes the new line of interest because until we break it, we're undeniably in a downtrend, and a steep one for that matter. But is it not true that everything kind of came to an end when we got to the white dash line? Almost like anything that was past it had to come back to it, like they weren't allowed to continue pushing it beyond that level. And that's the impression I'm getting. That, and I can't help but notice even on the short term, like when we look at let's see, the Wyckoff again here. It's managed to make this kind of phase A into something that's managed to come down into the SOW in phase B. Not particularly the same kind of way, but it is true that until we made that increasingly lower low, it may not be interested in that UT. Now, the interesting part about this is when we break this line, the schematic suggests that it could be interested in making an entirely new high beyond any other high that we have in the schematic. UT goes beyond everything. So that's intriguing, puts a lot of interest on this level. can't help but think, when we make a consolidation and it is literally very similar to one of the past, can it have similar characteristics contained within it? Well, I'll tell you one thing. The characteristics that we saw in this were very, very similar to moves that we've had in the future. And I'm like, could we make these moves again? And I'm like, well, what about the N waves that we're doing right now? Are they the same as they used to be in the past? Like, are we getting the same kind of movement again and again? And is it appropriate in this area? This is a bigger version here, of course. But popular, definitely. So, I mean, what's not popular is completing it. Phase A tends to be accurate, ironically. And in an N, like, okay, so I have different waves, like, that I basically have come to use to explain different movements. And, one of the most common ones is the S wave. Something that we can see happens in M's, something that we can see happens in W's. And, can be M into W. It can be part of a 5-wave move. And that's a terrible 5-wave move, but it is 5 waves as we've come to know them. And essentially, this movement here, it meets back at the equilibrium. You can see that one portion essentially doubles and then returns back to itself. So I call it 2 steps forward, 1 step back as well. Because basically, like, this is one step, this is another one, and then it takes it back, takes the second one away. And that's pretty much what's happening when we do this. We take one portion, we double it, and then half it. And that's what happens there in that wave. Good way to understand it. Now, an N wave. It's similar in other ways in the sense that its equilibrium is on an angle. And it still has very, very interesting qualities because, like the doubling factor here, this area gets doubled as well. This entire area up here manages to double down. And then there's the wave with gap, where essentially it doesn't manage to meet in the middle at all. Sometimes it can meet on an equilibrium. Sometimes it can have like a gap very similarly like this. And you'll see that a lot in 5-wave moves, like the ones that look actually proper. The 1, 2, 3, 4, and 5. So it's good to have an understanding of those. Because not a day goes by where the market doesn't make those waves. And they're very important because of it. I'm like looking at it, I'm like, well, one's right here. 1, 2, 3, 4, and 5. So why is it that the 5-wave moves so important? What does it do on the 5th wave that makes it reverse so well that it doesn't have in any other wave? Like we look at this one here, and it's got, I'm gonna use different colored lines for the example. I mean, I guess I don't use that color, but this line, and then this one here, this line is created on the 5th wave. And what's cool about that line is because you can see, on the 4th wave, It literally has the ability to make so much space to even get to the major downtrend. But when it makes the fifth wave, it creates just this like tiny little area in between the price, you know, and that's right here. This line, literally right here. And that area is filling in now. You know, this 5-wave move right here. So, I mean, if you're already in, there's no need to take it, but I mean, that's the beauty of it. If you've taken some profit off at the gold bar, that's all you can do. If you've hedged it, but that's it's pretty passive. It's not as stressful at all, and very, 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 you know, rewarding to manage a position that you know is willing to pay you more than you think that the time is worth in the day. You know, like it's it's not something that that happens very frequently that we can make major moves like this, but it's been very, very choppy. And as I said at the beginning of the day, the major goal, and I said it yesterday too, is to be positioned for the earnings tomorrow and position long particularly, but and finding a hedge short for the report should be the name of the game tomorrow and for the end of the day today. Like there's a good chance we break every single line on the chart in the upwards direction and then try to take most of that move back. So we'll be watching for that. You know, like this entire movement right here could be a left shoulder. Wouldn't that be something? Because it does that in here too. You know, this entire movement right here, right? It amounts to it coming to a new high and then coming down and then actually failing a head and shoulders to get here. Like it literally has to do that. Or maybe I'm crazy. But in my opinion, that looks like a failed head and shoulders if I was to show that to you. You wouldn't say that's a Wyckoff, would you? That's the funny part about it. Because I wouldn't either. I'd be like, oh, that's a failed head and shoulders. It's not a Wyckoff. But actually, the Wyckoff entails that this should fail. And even in the Wyckoff itself, it even shows on a bigger scale that it goes head and shoulders to inverse head and shoulders inside of that movement. Which is funny that that's in there. I'm not even sure if that was a consideration when they made it, but it is the fact of the matter. And what's ironic about that is the head and shoulders, the inverse head and shoulders is part of making the biggest triangle. And I mean, that's what it does. I've come to recognize the head and shoulders to inverse head and shoulders is an 8 sequence move. And it goes through this 1, 2, 3, 4, 5, 6, 7, and 8 times it goes sideways across this level. How is it not a consolidation? It's clearly not moving anywhere while it's doing this, right? So I've come to understand that, and I'm like, okay, not gonna fight this till the end, you know? It's like it goes through so much time to just do that stupid move as well. And when it's finished, it's done, and it's like, okay, whatever happens next typically isn't as bad as what has just been going on. Typically, it leaves the entire area, and that's a good thing. Unless you want it to stay in that area, but nobody really wants it to stay in this tiny little area where basically it's only allowed wicks and spikes out of the top and the bottom. And like, you know, you'll see the middle can be the same distance as the top and bottom too, but that's fine. We see that all the time. One big way to go sideways. And I'm like, now we have this 5-wave move. It's really working out well. It's like 1, 2, 3, 4, 5, and it's managed to come up to here now. We've not only broken this line, but we've managed to break, wow, we're breaking the second line as well. Now, what does it do? Does it, you know, remember this last one, right? What did it do? It managed to double down. It managed to take this entire area in here, right? It did this entire area, and I'll make it a different color so it's visible. Like this. Oh, okay. This area here, we don't need to see the price in there for a second. All we need to do is understand that it took and doubled to get to the high, right? And we can see that it managed to double. And then it comes down, and what did it do? It managed to double. That's how I got the green dash line. You know, it just doubled. And I just wanted to show that. because what are we going to do with this one? We come from doubling. Are we going to end in doubling? I mean, it's only what it's been doing. And if it is managing to use the Wyckoff again, I mean, what's the result of having broken this trend right here? Like, what could we do if we get out of this triangle? You know, the purple one. We actually rally up into a new high. You know, because that's what it suggests if it's going to do it properly. Which, I mean, it hasn't done it all today, but you know, it's not like it's not going to do it properly again in the future. I'm sure it will, but it's best to allow it to try to do this, because it's, I mean, really, what is it, who's it good for, right? I mean, if you're trading the short term, it's great. I mean, but it's not really moving anywhere for anyone that's making the big bucks, and we can all see that. If you're good at taking it back to the white line, then that's fine. But that's also coming to an end very soon. We're, you know, in this series here, you know, we're going to start getting more familiar with the extremes of the consolidation. Perhaps after the next extreme there could be a consolidation, but I'm like, you know, that you know, how much time do we have left in the day? Can we even do this? Like, if we're going to keep everything to scale, it totally does not have enough time. So does that change the fact that there's earnings coming out tomorrow? Not at all. But the earnings that are important don't seem to be happening in the morning. So there will be an entire day of movement to try and either shake people out or make people provide a position, the institutions. So I'm very curious to see what they do at the close today. Because like I said, many ordinary American people will not be able to get exposure tomorrow unless they have a day trade. So their exposure may be captured today. 243 big red candle. The negative response to the red yellow line. So interesting, because when did we do this? When did we have this before? Daily lows. When we were actually making for a strong break of that line. This is the kind of nature that it truly showed us. Puts a lot of emphasis on the gold bar too. Gold bar means business, but problem with the gold bar is it likes to be even. And making it even is not good here. If it decides to get under it, it doesn't get under it by a bit. It gets under it to get even. That could look like everything it's done on top of it, so you have to be careful with that. Also, the blue bar below has never been tested. Imbalance is coming up, and could we produce enough volatility on it to acquire the blue bar? It's possible. I still think that no stops are safe above it. However, we've seen today and other days that it can make a bearish profit target, right? Right down at the bottom. Go so close to it, not even hit it. Like, well, are we out of that environment yet? No, 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 no. I don't think so. So it still has to be on the mind. It's terrible, honestly. But towards the end of the day, it's actually a little bit better at moving. So hitting B points gets a little bit more frequent. Like, think about the B points we've made towards the end of the day here. Is it not better at getting them? Any one that's been made since 12:30 seems to be hit, no? So I'm like, all right, that's interesting. Although they have been small, they have been working. So I'll give them that. Like, it's been going out of its way to actually come back and hit all of them as far as I can see. So when does that end? With the gray bar, I wonder. Because ever since we've been moving in consolidations, they've been contained within the rough width, like, of those gray zones that I've got on there. And when it's consolidating, it's doing that. And it seems to be wicking and spiking to the highs and lows with absolute precision of that kind of confinement area. What does this remind me of, though? If not the low of day, when we couldn't make new lows anymore. It was kind of flattening out. Remember when I said that? Flattening out. I don't know where that was actually. I thought it was low of day. But it was unable to actually continue going down because it was flattening out. I don't remember actually where that was, ironically. Do you remember saying it though? If we go back in the video, we can find it. Undeniably, triangulation is an option here. Getting back to the POC is inevitably increased volatility here. We can see the average candlestick size is undeniably increasing, regardless of the ATR or not. Because the ATR, it's an average, so sometimes if you get really quick movement right off the bat, it'll take a little bit for that average to actually respond. But visually we can see, as a matter of fact, the candles are getting bigger, and we don't need the ATR to tell us that, right? So we have to understand, like, the ATR could be increasing. It means that we could be getting that end of day volatility a little bit sooner rather than. That's not even. It's 246. Not really sooner, but end of day volatility then. But whatever, right? I mean, end of day volatility. That's a ticket out of this consolidation and away from the VWAP, or sorry, away from the POC, because the red line right there. I'll show you. Red line in the middle of the screen. This is the heaviest volume level on the entire screen right now. It might not be of the entire day, but it might be the one that counts right now. And it looks like it's making moves that are trying to get away from it. Now, yeah, obviously it's allowed to test it as it's leaving it, kind of like shutting the door almost, as it's crossed the barrier that gets us out of this confinement. It leaves the zone and kind of taps it as it leaves it. The retest, essentially, which is absolutely fine. I cannot help but notice that gold zone right there. It's suspiciously particular responses to what we had before. Why is it the same size as the move that we made below and here? Is it the work of the public? It's just like hard to believe for me personally. But the intention of those that want it to seem centralized for the end of the day, keep everyone scratching their heads. And what are they going to do if they want Amazon or not Amazon, Google or what's the other one? Microsoft exposure now. What are they going to do? Buy at the top here? Well, what if it's bad news? They got a terrible price. So it's like they're going to be thinking about that. And anybody that wants to market exposures in a similar spot, right? At the end of the day, having held puts you in a better position, but I think we're going to get involved with this 261 again. What it has done is it's managed to make a hell of a consolidation around the 261, but has it made the equal distance? Oh my goodness, it's so equal. Both sides from the high and the low on top of this level. The 300% right there, right there. Double that down, we get our low. And I'm like, well, is that one way to show that we're really interested in this level? Because we've made one portion, we've doubled it, and then not quite taken it back yet, but we're in the process. You want to know another thing about this area that I think is so stupid? The green zone didn't get a grind, and look at the price it paid. Absolutely ridiculous. It should have grinded more, because it wouldn't have struggled as much. But the higher it goes, the harder it is to maintain that grind, especially like, look, when we got to the green zone, how much grind can we put in there without breaking the yellow line? It's like something had to change there, but the yellow line didn't break. And it's like anybody that's been associated with that, they tried to make them part of a squeeze. And I bet you that's kind of reduced the amount of or pushback that we're getting at the highs now. I don't think people will be as bearish when they get knocked out of a position on a steep trend break like that, when it goes up so fast, so hard, and then comes back down to the mean like that, just to kind of taunt them, because they know everybody shorted right there for the break of the trend, and then it came back down to where they got in, otherwise completing the spike right at the tip of the rising wedge kind of thing. And I've noticed that in the past, like we make a rising wedge, this is a bearish pattern. You go on Google, it's supposed to go down, right? So when it does this and goes boom, it's like, oh wow. And then everyone's like, well, what do we do now? And it's like, well, it goes back to where they got in. It's like, oh, it's still not good enough for so many people. And then it chops, and it's like, well, this is a range now. And it's like, that's just like absolutely terrifying for these people. When Google says you're supposed to short it here, I was like, maybe about like 50 pages of like people just saying it's supposed to go down from that point. And now it's like very, very, very common for it to go the other direction. So certain environments can make it a little bit easier. But I want to talk about this as well. You know, using the white dash line, getting back to the white dash line, we've been doing that. Everything beneath the white dash line is undeniably wicks and spikes back to it as quickly as it's left it each time. That's like my argument towards it would be, did we not leave the white dash line as quickly as we left it every single time and it returns back? I mean, what does that show us? Does that show us that the price is not allowed to stay below that level? Every time it goes below it, it comes back as quickly as it left it? Well, that's interesting. Interesting. You know, in the short term, we can see that this is a level that wasn't placed here today, but it's a level that has already worked like this in the past. And why would the market build a relationship with such a level? You know, it becomes an interesting question. Because I'm like, wait, hold on. Let's go back to this here so I can show you the reality of it. It's like, you see this move right here? Like, the entire dump that we were making before, it was going down, 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 but it found the time to come back to the white dash line and then continue on for like even more of a dump specifically. But did you know that entire dump, every single seller that was part of that move is at a loss right now because we're back at the white dash line. So it's kind of interesting that that super bearish environment, everyone was bought out of it. So it's really, really intriguing. Like, it was really tough for a lot of people to be long underneath that white dash line, yet it was the right thing to be. It just was tough. You know, they reversed it at 5:48 in the morning originally, and being able to catch that low today at 9:43 so soon into the day is contrary to so many other days where at that period it would typically be tough. But on the date, you know, that was one of the major changes that they made on today versus maybe past 3 months, is that we haven't had a move of significance out of that time for a long time. And you could say that it catches people off guard. Like, it doesn't allow them to get comfortable with the day and develop a larger position, that's for sure. Because that was the reality, and it typically is that way. You know, it's like you can warm up in the morning with a bunch of like shitty movements, and you know, essentially they grow into bigger end of day moves that amount to being exposed to a larger trend breaks. And it's only ever made it difficult the past few days to be exposed to a downtrend break. Nearly the entire days have been spent going down and breaking the trend at the end of the day. And the day with the biggest trend break breaks it at the beginning of the day. Different to how it usually is. So anybody that was trying to do the same thing that worked for the past few days, effectively they've never seen this before. But the same thing that's been working effectively ended today, as it has not worked today. Anything that anybody tried on Friday or Thursday or Wednesday, ineffective. And anybody that's still clinging on to anything that worked on Friday, Thursday, or Wednesday also has been bought out. And that's the irony of it, because I knew on those difficult days that they were days of accumulation for the institutions and difficult for the individual. But ironically, they managed to buy everything. Back to the white dash line too, and that's fine. I mean, I love the white dash line. You want to know another one too? If you've made it all the way back to this white dash line, don't forget about the next one, all the way up here. 15,000 exactly, actually. 15,000 exactly. Next white dash line. So we can see it's breaking the downtrend pretty well, getting back to the white dash line. It's looking pretty good. Looking pretty good. That medium bar, I'll never forget that the medium bar that's inside of the green and the red right there, the purple one. That was created as a 188 200. I can't tell you when, but I can remember like a picture vision of it. The high is a 188 and the low is a 200 of that purple bar in between. The one that we just basically barely made it to. We didn't quite test it, but it's a 188 200 and it was right in the middle of the green zone and red zone, so I just figured that could be the middle of the range. And it's been responded to like the middle. Like when we ran into it at that second white arrow there, that was something. It definitely went sideways for a long time there. Tested it from both sides. So we'll keep that in mind. turning the white dashed line into something of a support eventually could be on the agenda. Now, one thing I can't help but notice is that the white dashed line is being made the POC. And I cannot help but notice as well that the imbalance is closing in on us. So one thing that I do expect frequently is that we try to make a centralization for the imbalance. And I think that this is done by the institutions in a defensive positioning, like for defensive positioning, because they want to keep everyone contained. And there's no better way to do that than to make a red zone and a green zone and keep everyone in between them and keep everyone, contained in that area. And it creates indecisiveness and people expecting long-term positions. They when they take long-term positions in the middle of the consolidation, it really is like rolling the dice. And they even know it too, but they're comfortable with taking that risk. And I'm like, not me. I'm like, that's not. It's just too big of a maybe. A lot of maybes in the middle. That's one way you can remember it. And the best price never came out of the middle because there's always been a better price than the middle. Because how else could it get there if it wasn't from a better price? If it is truly the middle, never the best price. It's a good place to take profit sometimes, but not a good place to enter positions. That's one thing. Not to say that no positions have ever worked from the middle, but it just exposes you to being able to stray away from the middle as far as it has in either direction before it made the middle. And I mean, if it's already shown that it's made the capability of being able to go that far away from the middle, well then, it's just like rolling the dice, in my opinion. So it's like we can choose where we want to trade, and we can choose what's good for us, right? And it's like a lot of people, they think that when they sit down because they have that time in their life, they should be trading, but sometimes that is a bad time to trade, and it takes discipline not to trade at those times. But I just had to say that. So it's tough, It's tough to hear that because you might be really ready, and then it does this and goes right back to the middle every 5 minutes. It's like, well, that's not doing the best movements for the people that make the most money. First thing that we can realize. So, do we want to settle for this because they sure aren't, or else we'd see it move more, right? So it's clearly not the best place to trade. I mean, I'm just building up an argument. It would be, these are things I consider. I'm like, if I have to explain myself, like this is what I'm getting back. If I mess up, I'm like, well, how do I explain that I traded in the middle? Because I've got a lot against me, saying that I've got a whole argument of different reasons that say it's risky or, and I wouldn't be able to fight against that, right? So there's no better reason to trade in the middle than, there's a far many bad reasons to trade in the middle, but none of the bad reasons seem to be less than the good ones. So they're always I'm always gonna have a better reason not to trade in the middle than I will to trade in the middle. Basically, is what I'm saying. And an easy way to remember that is there's a lot of maybes in the middle. You might be trying to figure out, like you might see like 10 variables. Like there's a 161, there's a 188, there's a VWAP, there's like all this different stuff coming in from different fib sets, long term, short term. And you might like some of them, you might not like some of them, but you might find that there's a lot of different variables in the middle, and another way to look at it is the middle has like the concentrated area of the volume. Most of the people trade there for some reason, right? And unless you want to end up like them, you don't want to trade in the middle because most of the people end up struggling. And you can see why. If they trade in the middle like that, how are they supposed to come out on top, right? Just the little bit of fluff that they get out the top of the range is what they're allowed to take profit with. So far, that's been the case for anyone associated with this range. So I'm like, I can see that as so basically when I take a trade next, it's going to be but a better reason, some sort of reason that's not conflicting with all these negatives. And And I mean, not to say that you can't take action inside of a sideways range, but it's just offering less, and that has to be made a consideration. So it's part of the risk pool. It's part of like the, okay, I understand that these are the risks, but I'm taking a trade because I see a reward that's far greater than the risks, and because I see it working because of these reasons. And if you can say those reasons, then you're good to go. If you can't, well, then you're gambling. Like that's the way it goes. I'm anti-gambling. Like I don't like gambling at all. I'm super risk averse. Like 100% like interested in just keeping control at all given times. And right now, we've got to move away from the white dash line yet again. Let's see if it is interested in coming back to the red and yellow. It's going to be used like a blue line, perhaps. All right. If we take a look at the other chart, blue bar. Where is it? Not quite yet. Isn't it interesting that that was the time that I marked? Right there. When we were looking at the beginning of this downtrend, I marked that time right there. Why? Well, because, sorry, I guess that happens every time I push the mute button from here on out, so I gotta be careful. Alright. The idea that we spiked out of the top and the bottom of this range, see clearly. Alright. Got back to the red yellow line, but doesn't matter. The idea that it made this spike, it's not a bearish pattern, to say the least. If it was a bearish pattern, what uptrend does it break to continue going down? Or unless it's a bearish pattern that offers an entry low to go lower, which I'm like, well, good luck with that one. Because there's far better trades, shorting high in order to catch. And I say that because I don't expect it to be good enough for anybody to have come down so much and then to find value in continuation when so much of the trend is developed. In my opinion, what's happening now is they're making it tough for the people that want to be exposed to the red-yellow line break, tough for the people that want to see it at the green dash line up here. But by the end of the day, something tells me that they will see it again. They will see the white dash line, as everything seems to be bought back up to the white dash line. If there's one thing in this consolidation that's happening more often than anything, it is that everything is always being bought up to the white dash line, unless it's being sold off so that it can be bought back up. It's literally all like not a single part of that was not somewhat related to the sequence of coming back to the white dash line. And I don't think it ends here. If anything, the only way that it can end is by getting on top of the white dash line as far as I can see it. And the relationship ends because it can't be bought back up to the white dash line if it's up above it. Because it already has been bought up to the white dash line. Typically what this does is it means anybody that's accumulated late into the range has then been stopped out and also piled into the continuation. The ability to, honestly, I think turn this into a B point. These two. I'd like to see that. In fact, let's make that a trend. Luckily, Pepperstone didn't shut off at the very high, so. We'll take off some of these.
There's been some gaps, in Pepperstone.
I got one.
Yeah.
Yeah.
Yeah, I'm just using the Wanda.
Mm-hmm.
Can't handle the gaps.
Yeah, like I said, with this chart, it's mainly the sideways ranges I'm interested in. And if it's a gap where there is a gap, I'm not worried about it. There was a gap there though, a giant gap on the volume profile. Because beneath we had this huge consolidation, and like that was on the red zone where it ended, and then like the green zone, it had all this volume, and then all the volume we had coming into it, which made it like really gappy there. And then I'm like, what about this giant line here?
Hey, I gotta take off, John. Appreciate you, buddy.
Yeah, man.
Yep. Everyone else have a good one.
Yeah, take it
See you,
easy.
man.
Cheers.
This is not right. Sorry, I'm just trying to figure something. What I'm really interested in is this level right here. Breaking that barrier down, it could be very significant. And it could lead to some pretty hardcore levels. Talk about this. Yep. Imbalance is coming up. Most controversial thing towards the end of the day here. The blue dash line. at 350. And I mean, well, I'll tell you one thing. This is it's a terrible attempt at a 5-wave move, and I see this sometimes. But what we have here is the ability to draw the same kind of trend that a fourth and a second wave connected would give us. What it gives us is an H, a pattern that it has to go through when it makes 5 waves, but also a pattern that it has to go through when it makes a W. The most attractive place to play a 5-wave move is when it already made one H and failed it. The second one is more likely to turn into a W. That's just the way it goes, right? Like, perfect example is here. H, and then it fell down, and then the next H turned into a W. In this case, it's placed an intriguing point right here. An area where, like, I'm curious to see if this area is separated by even amount. Now, the thing is there's two. We have a small triangle that we've made out of it already, and also a bigger one. Can't help but notice that this is also like coming back to test the 188 200s, and you know, for the people that were going for this original B point down here, you know, the 188 200 wasn't very forgiving for them, but what it did was is a big move back to itself, and it's kind of done a bigger version of that move. And when it's finished coming back to itself, it showed an increasing interest in its ability to break the trend, and I can't help but notice that every single red yellow line is like that trend that it broke. The green zone could lead to the red zone as well. So we can see green zone to red zone, back to the green as well. You know what's interesting about this as well is it already had a small spike. Could it be interested in doing the big one? You know, I'm like, is it? Is it? You know, because literally we've managed to do a consolidation and it's managed to make spikes on either side of it. Getting to the other side of this range, the other side of the green zone, is like testing the 188 itself, a level that truly never got much. You know, much but a spike through it when it left it. So here we are again, threatening to test it on what looks like a fifth wave. 2, 5. Of course, it is above the VWAP, the average price of all of the shares and contracts since Friday. Just out of curiosity, let's have a look at all the untested B points that it's managed to leave along the way here. You know, like this one here, I don't believe that was ever hit properly. Stands out a little bit more than anything, but after all, they're all on the path towards the bigger one that never hit properly. Not even on the major pullback. But what it did do is it managed to pull back and leave a gap. Let's take a look at what it did last time it was in this range and what it could be capable of doing now. So when we did make this range, we put a proper siege node on top of the green zone and then it ran away just to come back to it, right? Then when we left that range, it managed to make an N, which was phase A, essentially, of a Wyckoff, and fail the rest of it to go up. And funny enough, when it failed, the people that would be associated with the move that's supposed to come down like that, right? It failed and just allowed them their money back. Okay, so we'll remember that, right? And because it does that all the time with rising wedges. And when we made this, it was a strong enough node that when we responded to the red zone, it came back to test that level again, creating this node, the volume node that we seemingly can't pass right now. Interestingly enough, just past the volume node, where it gets really, really low in volume, we have the 188, which is the bottom of the green. So that's important to understand where that is and why it could be something that they could test. After all, you can see how it came back to test it from the other side. We've never done anything with the 188 like that, really, unless you consider this small spike. But the whole thing to come back just to test them could be on the table, so it must be allowed. Now, everything past that point is quite intriguing. Sorry. So basically, we have the green zone, which is spiking out of the distance of the middle of this range, pretty much by the distance that we made on the other side. Now, at all times, we were associated with the medium bar, which is the gold one, pretty much.
It's almost got down to the 30% retracement too.
Yeah, which is hardly a retracement. It's common though. Yeah, what I was thinking before is the 188-200 is the level that otherwise would capture a lot of people shorting it, right? And then it treated them like this in the short term. Then it kind of treated them like that on the long term. And everything below that point starts to be B points that are untested. It seems to be the case that everything above that area is really easy at testing its B points. Not a single bearish harmonic pattern didn't play out up there. And funny enough, every single bearish harmonic pattern below the 188-200 still remains untested, which is huge. Absolutely huge. It means that everybody that's still shorted that 188-200 is being squeezed. Like they all get their targets above that level, but isn't it tragic for the 100,000 people that are caught short at that level? You know, and that's the rough part about it. There must be a lot of people caught there for them to treat them like this. But it's likely in the movement that they've had up here, anybody that had a position was then stopped out in that movement. And then it comes back and grabs their average price. That's I think what the ploy is basically. Because it's a matter of fact that ever since we got to the controversial reversal area, every B point has hit beyond it, yet that reversal area and everything below it's never played out. Till now. Because this is as low as it's ever been since we hit that 188. Becomes the case as well that even on the break of the downtrend, one thing that we could see is a reversal as quickly as we made it back to the baseline, but that doesn't buy us much more time. You know, it would still be the case that it would take longer to get to the trend. And I'm like, even like, okay, if we get to the downtrend, right, and it happens quickly, it's hard to break it, especially because of the white dash line. Everything could be bought back up to the white dash line, and it could literally fall. So we have to watch out for that. And their lack of ability to really create nodes properly on the bottoms of the green zones could effectively make it difficult to hold towards the end. But it's become the case that very much even around that middle consolidation and the volume that it has on either side of that node. Like let's take a look at this node right here, this middle area, this best highest point of volatility, and what it's managed to do here. And what's that worth on the other side? Roughly where we are right now. We have to watch out. The middle area, perhaps this happens on top, and what we're at right now happens on the bottom. And that's another possibility, something we've been seeing a lot of lately. The VWAP would be at the 161, the major B point down below. Well, the last major B point. Like this one, I don't consider a major B point, but this one I do. As well as this one, it's not very major. It's just a small one. But now it's a tested one. And it becomes the question of whether or not we want to make the same counter trend move to try and test the 188 from the underside as well. because there's been a very common move that we've made throughout this area. It could be this one. Back to test it from the underside. It's a little bit bigger or so on, but whatever. What it is now is it's showing that basically we've had this kind of test on both sides. The green zone. Next test may get back into it. Also an attempt at the 188-200. Is at the 41 of this. It's always interesting when it becomes the case that it has to break the trend in order to get back to the last barrier. It's not that way yet, but if it takes more time, it's certainly looking like it will. At the end of the day, that white line at the bottom of the green zone, the 188, something that I would say really changed the way that it traded when we passed it earlier, and testing it again, pretty normal. Keep in mind, 10 minutes till the imbalance. New trades are all subject to being exposed to the imbalance. But it's a controversial imbalance, I'd say. Hell of a move, right back to the white and green. Forcefully. They made it equal. They hit the B point. They got back to the node. They made the spike beneath the green zone, the same as what they made it above. Every B point on the short term, like, it has a very valid reality to get hit. It's very likely that we try to carry no B points on the way back up. It would be ideal. It's not much to test them. It's not been very good at testing them though, I'll tell you. But it has since it crossed the 188-200. And it just came down to test a B point on the short term here, soon to rival the green zone again. Progressing somewhat better each time it attempts a move back into it. This one still underway. The yellow line becomes a very interesting one. Can we respond to it? How do we not make it a response to the node and break the red yellow line? It's gonna have to deny a response to the node in order to break it. Could it affect the break of it? Well, this close to the imbalance, of course it could. At the end of the day, it's normal to try and centralize for the imbalance. And if it's not centralized for the imbalance, it's normal for it to honestly try and centralize for the exact moment of the imbalance. back to the 188 again, short term. Zone. Undeniably, the next time we see the 261 at the high, it will be on a secondary high, and it will have a new trend supporting the lows. What we're doing now is essentially queuing up for the break of the downtrends from what I can see, and when we do break those downtrends, a new trend will form from the low. And it's important to put it on there because it'll be the entire uptrend. And the beauty of it is if you can see from the very bottom of this chart, the idea that this trend was too steep, and so was this one. And these ones are all essentially way steep. But this one, 25-degree angle as opposed to the first trend, which was 81. And the entire movement has readjusted the trend to be what could be as low as 25 degrees as we currently sit, which is a major readjustment. Now getting back to the same level that we were on a 25-degree trend, like think about this for instance. When we get to it, if hypothetically, if we break it from this point, right? That means that if we get back to this high, the sooner that we do it, the more time that we have with this line. And essentially, this doesn't have to happen from here, but when these lines do break, this line will inevitably form. And essentially, that is what I see happening in the future is there will be a trend that will take us through all of these red-yellow lines, and the formation of the new uptrend will form. And it will not be so steep. And everybody, what did we do in the morning here? When we first made this B point here, right? And it was the biggest B point, the one that everybody could see on the short term. And it came past it. We tested it so many times. And then when it finally came back from what could look like the most profitable attempt, it did not allow it. Now, every single attempt that it made before that one wasn't even at a fib that was of any kind of relative level for it to be considered played out. It wasn't played out. And it didn't play out here. So it's still not played out. And it shows that we can make a jab at such a significant B point and still not play out. Then we get to a level that's otherwise very threatening to be able to play out. And what does it do? Anything but come down. It came down only back to the level that it was supposed to come down from. According to the last few highs that have worked at this level. So it's kind of intriguing that every single B point that we can see, of major significance below the 188-200 still remains untested. Could it be the case that the W that we're looking at, hold on. The W that we're looking at here is something that requires an M of similar caliber to be able to get back to itself. Now, when we draw an M into a W, is it not true that the movement up here could be similar to the movement down here? Now, is it true that this movement up here is similar? Could it be related to an M? And could it be related to this W? Because if we're ever to make an M into a W, could this be the case that that's what trend we're forming? Because like the trend I'm talking about, right? The big trend, the one that comes from the way bottom there, that trend happens here too. This entire channel ends up collapsing on the break of that trend, and sometimes what we get is exactly what we had here in order to give us that M into W. So effectively, you got the W, and then you got the M. And the idea is that it comes back down to at minimum the B point on the M. And that's the value of being in for that trend break. But at the end of the day, that's a long ways away. And there's nothing saying that it actually has to come down. Well, so we could form that trend and go through the top. Why do I say that? Well, because if we go back and look at what we've been doing today, 5-wave moves, how have they really worked out? Well, the fifth wave hasn't been known to come down, because how many fifth waves have we had and not come down? You know, the fifth wave, we're lucky to make it back to the fourth. You know, like we could see in this case, 1, 2, 3, 4, and 5, and it just came back down to 4. Wasn't too crazy. That was terrible, if anything. So, I mean, like, what if it happens again? Because it's only the trend where that seems to happen. Could it continue? It could, because I mean, this trend that we're making here, the major support line, might carry on that same characteristic. Because until we break the trend that comes from this bottom, you know, we could still have those characteristics. And I mean, this could just be how we move down when we're moving down. And when we start moving up again, we may see these characteristics again. After all, if this is just wave 2, wave 3 could look a lot like that. You know, a lot more than that potentially. So the value of being in for the break of the red yellow line, seemingly high, yet it seems to be the difficult way to be positioned if you're not positioned from the beginning. And it's like I admire the fact that they didn't come down even halfway, because they're not trying to allow people in. So unless they want exposure from the 188-200 long, you know, which is kind of like makes your brain twist for a second. It's like, what do you mean going long into a place where it's supposed to come down from? Interestingly enough, the otherwise supposed resistance has been turned into something that's acting as support, because not a single move below that 188 has managed to stay below it without being bought back up as quickly as it was sold off. So I'm like, these things are really important to me. I think that, you know, just having an understanding of them is really cool, you know, and it makes it easier. It might seem difficult to get the understanding, but when you have it, I mean, it's worth every minute of that thought process. And I'm like, even the triangle we have now, the more I look at it, I'm like, could we just be doing this triangle by the end of it all, confined by the same kind of area that we did not too far away, ironically, not too far away at all, and it's appropriate as well. Of course, the imbalance was nothing too crazy. In fact, the imbalance was terrible. I mean, if I took the time off the chart and asked anybody where it was, even with the equivolume, it's nothing special in comparison to what we have been doing in this range. Pretty what I do want to talk about though is that it did come up and test the red yellow line, have a negative response yet again. And I mean, this red yellow line, it's got to be up there with, you know, how many responses can we make negatively to a trend before we break it? You know, because the irony is every single part of that struggle is likely to be taken back. And all that area that's seemingly tough, the area that seems to be tough to be long, and I mean, you can really appreciate it if you're in from the bottom. Like if you're in from the bottom and you watch it come back 78 of the way, 78% of the way, you might think it's hard to endure that pullback. But try taking the 11 low zone with every single trend break that happens from this high. You know, it's like how many trends? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and they just keep going, keep faking out, keep acting like this. Whereas it's not necessary to try and grab them. And now I'm questioning like what the there's no way that we haven't like went through the RSI in a while there. Looks like we've actually been holding above the short term one there. Check the 15-second out. Grinding.
Just grinding in the middle.
Yeah, it's been grinding. This is the closest it's gotten to the green in a long time. The green is almost touching. The green almost looks like it would connect with this red zone here. If we ever manage to meet that red zone, I would be surprised if the green and the blue line weren't touching on the RSI. definitely a wicks and spikes territory trying to grab that zone. Because I mean, what is there as well? The VWAP? Yeah, so stretching to hit the VWAP essentially inside of that red zone would be the would be enough, I think. And it suggests that the next time we're associated with breaking the red yellow line, I think it's going to take all of this noise that it's taken beneath and put it on top of it in one which way, shape, or another. But those two distances, I find they're going to be important. Time at which it does it, the whole other thing, because we're running out of it. So after hours, it'll be incredibly easy, like to break that line. In fact, because think about where it begins tomorrow. Unless it's going to continue with the energy it has during the day, very likely the sideways movement through the end of the day not only breaks that line, but the medium bar and potentially the downtrend itself. Power of the VWAP is effectively to send it sideways, so we shall see if it is interested in grinding it at all. But I'm getting more wicks and spikes vibes out of it, but that's probably just because it's the close. Definitely looking pretty spiky. Just came back for some B points in there as well. Nothing too crazy though. A little bit of volume on that candle there though. Google. Microsoft. Returning to the equilibrium for the end of the day. Stretching for the VWAP. Didn't quite stretch on the RSI, interestingly enough, almost like a bullish divergence. Because on the second move, we didn't make a new low on the RSI. Intriguing. More wicks and spikes, like I said. And interestingly enough, it'll have to change based off of the end of the relationship with this yellow, which has worked very much like a blue. Testing from both sides and so on. But that's being hard to do now, as there's no more time left to spend testing it from underneath. And from the past 5 minutes, that has been the primary motive market. Now, of course, the market does close in a couple minutes, so consider the time. The distance that we had finally on top of the red zone might be had from the inside of the green zone out, not the outside of the green zone. But I'm checking the outside as well. Not too far of a difference between the two. At the end of the day, we ended up at the VWAP of all places, centralized at what is undeniably the average price of many people. It's Friday. Beginning of Friday as well, that is. Come back to test their average. And interestingly enough, it chose to do that instead of the B points. Still remaining to keep the gap on top of them intact, as it did with the beginning B point at the beginning of the day. Now it's a hell of a way to move back to them too, because when it moves back to them, it does it with incredible violence, right? And I'm like, well, to come that close and not get it, that's just something. Somebody's not happy with that for sure. So it's definitely, you can see why though. I mean, at the end of the day, it's the VWAP is right there with the red zone and with absolute precision. It came down and hit that, and it's interested in making it back to the green. That's the closing bell there, of course. The volatility looks like it's calmed down a little bit, but hopefully you guys had a wonderful day, and tomorrow should be a lot more interesting with the volatility at the end of the day and all the anticipation that'll happen throughout the evening. I do expect this line to be breaking throughout the evening, so we're gonna go check that out. That can be monitored, of course. But yeah, with that being said, I'll catch you guys later.
Okay,
Yeah,
take
have a
care,
go.
guys.
Yeah, take it easy.